Good morning, everybody. Welcome back to another episode of The Market Open. It is Tuesday, August 6th, 8:46 a.m. We are here. We are live, and boy, oh boy, do we have a lot to talk about. Folks, we have a lot to talk about. So, yes, we have Palantir earnings and the aftermath of Palantir earnings, which were just, the words are hard to describe how incredible of a quarter that was. We're going to break it down, deep dive, talk about it. Stocks up 10% in the pre-markets, upgrades across the board. Makes sense why the street's recognizing it. So we're going to talk about that. But from a global perspective, one of the reasons Palantir is able to go up right now is because Japan is rebounding. Japan is rebounding at a level that I don't think any of us expected. If you looked last night at the Japanese index, it was up 10.86%. And it lost the most it had lost ever since 1987, 2 days ago. And then last night, it basically reversed that entire decline. Now, it's still down for the month. It's still been a volatile month. But Japan came back. And Japan came back in a way that was pretty damn exciting. As a result of that, U.S. equities rebounded. The yen over the U.S. dollar started stabilizing. It just kept going down. Now it's starting to go up a little bit. And we are starting to see a little bit of normalization in the broader equity market. The reasons you're seeing the pre-markets start to look a little bit better than they looked yesterday is because it looks like Uber right here up 8.7%. We'll talk about Uber as well. It looks like investors have kind of realized things are okay. And I hesitant to say that things are actually quote unquote okay. There's a lot we have to dive into from a macro perspective, but so far S&P's up 0.43%. At one point in the pre-market, it was up 1.2%. It seems like the Nikkei index starting to go higher is allowing broader investors across the world deal with the volatility in the United States. And as a result, potentially the United States markets might go higher. I mean, for a Palantir to even go up 10%, not only is it because of the results, but in a macro environment where they're allowed to go up 10% is primarily rooted in the fact that the market is kind of recovering. And if the market is recovering, we might have just had a crazy flash crash that is only going to last for a day. Now, I'm going to go deeper into that in a bit. I don't expect it to only last for a day. If it did only last for a day, it created a generational buying opportunity, which is just insane to be able to have a buying opportunity like that in the middle of this bull run. But we'll talk it through. It does seem like Japan is making the United States feel a lot better. Okay, before we get into all the macro, let's talk about Palantir. So let's spend a good 10, 15 minutes talking about Palantir and their earnings. I was on the earnings stream yesterday. Thank you to the 6,000 people that joined the stream. It was very humbling and exciting to see that many people actually joined our stream versus the official Palantir stream and hung out with the community itself. I think this was one of those quarters where you tip your hat. Literally, right? You tip your hat. Shout out to Ileana for that joke. But you tip your hat off and you're kind of just like, okay, so the company that everyone said was never going to be able to reaccelerate growth, they reaccelerated growth. The company that people said was never going to be able to be profitable, they became profitable. The company where people said, yeah, AI is not really a thing. They don't really know what they're doing with AI. They are growing. They're growing more than a lot of other software companies in the context of AI, which is why we're probably seeing why they got the multiple. And the company where people thought, hey, it's a lot of fluff. I don't think U.S. commercial revenue growing 55% year over year is fluff. I don't think revenue growth of 27% year over year is fluff. No one can say Palantir is a low growth business anymore. Yeah, it's not 30% yet, but it is not 21%. We have beat expectations dramatically. Analysts wanted 652. We put up 678 million. I'm also going to do a video later today on just like a daily Palantir video going super, super in depth into the numbers. But the point is, you can see right here, these are not jokes of numbers. EPS is up 500% year over year. Rule of 40 score of 64%. I mean, absolutely incredible. Closed 27 deals over $10 million. Government revenue reaccelerates to 23% year over year. Last quarter, it was 16%. U.S. government revenue at 24%. Last quarter, that was 12%. And remaining deal value is up 103% year over year. I think this was one of those quarters where you simply look back and you're like, they know what they're doing. They actually know what they're doing. We gave our money to some people that know what they're doing. And the stock market is reflecting that right now. From Wall Street in the pre-markets, Bank of America upgrades Palantir from $28 to $30. They write, we continue to see Palantir's ultimate benefactor, the entrepreneur, the digital axe supplier that is still standing tall now that AI tourists have started to depart. Basically saying there is a handful of AI companies Palantir is one of those AI companies. Wedbush upgraded to $38. Now their bull case is 50, but their base case is now 38. Dan Ives says this was a game changer quarter for the Palantir story as AIP monetization story shines. Haters will hate on this one, but U.S. commercial AI speaks for itself. Cities and Jefferies remain neutral with a 28 price target. Mizuho raised to 24. Deutsche Bank at 21. D.A. Davidson to 28. A monster quarter from Palantir, and the entire street seemed to recognize this. The only one who was kind of bearish was Rishi from RBC. He says the shares are too expensive. Didn't really address the fundamental changes in the quarter, but real, firms that actually cover the company and care deeply about the progress, they realize there's no way they can have, less than a $30 price target on Palantir because they are starting to really see the momentum. Shout out to Chad in the chat, one of the Palantir employees who actually made their earnings become successful, given how much work he puts in. Outcomes over self-pleasuring demos and proof of concepts. I think, someone said in the chat yesterday, if you had to summarize Palantir in one sentence or one word, what would you do? And that's the word. It's outcomes, right? Like if you had to summarize Palantir and what they deliver in one word or what they do in one word, it's that they give you outcomes. Outcomes is the core thesis around Palantir. So I thought the quarter was just exceptional. I really thought Carp showed a level of confidence that was different from previous earnings calls because the numbers this time back them up. And when you have the numbers backing you up, when you're not growing at 21%, but 27%, you speak with a bit more bravado in your voice and you kind of start to show, hey, like this is real. This is not like a joke anymore. Even Shyam, I thought his answers were phenomenal yesterday on the earnings call as well. They introduced a new product called Operation Warp Speed. We're going to go deeper into that. And I know Palantir is going to be releasing more information about that over the coming weeks. But to my understanding, it is taking one industry vertical that they've been working on for a long time, American manufacturing, and they're productizing that entire industry into its own product. So the idea is it should be the modern operating system for American manufacturing. And there's a lot of problems with American manufacturing if you've kept up with Shyam's entire thesis on what's going on in America and why jobs have been outsourced. And a lot of that can be solved with software. And it is called Warp Speed. So as a result of that new product, I think, this is why you get 18 months, every 18 months at this point, we're getting a new product from Palantir. And you're not getting an acquisition to make this product. You're getting internal fortitude from those employees that get the stock-based compensation that we pay them to be able to come up with these ideas, put them out into the world, and then eventually scale them. I also want to underscore one point, which is that Palantir is very close to 30% year-over-year growth. We are 3 percentage points away from 30% year-over-year. I'll talk about what this means in the context of the stock, in my opinion. I do think if the market holds up, it's a $30 stock. And I don't think I do not think is it a little bit expensive there? Sure. I do not think it is egregious to be able to say Palantir justifies a $30 multiple after those earnings. And so we'll see what happens there, but they're going to get to 30% growth. I mean, we went from 13% to 18% to 21% last quarter to 27% this quarter. 30% is on the way. And if 30% is on the way, you've got to ask yourself how many other software companies are actually growing 30% in AI. It's not Salesforce. It's not Snowflake. It's not Datadog, to my understanding. CrowdStrike is there, but that's more cybersecurity versus AI. And obviously they took the big PR hit. So there's not going to be that many money. There's not going to be that many people doing that. And on top of growing top line 30%, which I think is going to happen in the next couple quarters, adjusted operating margins went up. Adjusted operating margins went up to 38 or 37%. When that gets to 40% and top line revenue growth goes to 30%, it's game over, dude. And if they can sustain that for the next couple of years, it is over. If not accelerate that further, 30% to 35% to 40%, if the opportunity truly is that big. Like, it's not a joke, guys. We have a winner. We have a real fucking winner on our hands. And last quarter, they absolutely approved that they are that winner. Here is Carp yesterday speaking on the fact that the best is yet to come for Palantir in their journey.
And the single most important part, however, of this is that we are going to play a determinant role in making America and its Western allies the dominant force again in this world. And because of that, the best times for this company are not in the past. I would say the single most interesting thing about this quarter, if you had to reduce it to one simple fact, after 20 years, after changing the way people do intel, after changing the way the battlefield works, after changing the way people procure software, after exporting our platforms to our allies, after punishing our adversaries, after building a commercial business, after DPOing, after seeing it all reaccelerate, the best times for us are yet to come, and we are planning to just take our energy and run this business as a business of which we are, which is our owners. We are owners with a very long-term focus for the best interest of our country, our allies, and our Palantirians and our investors. And so I'm very thrilled to have you participate in this, what for us means historic earnings.
So Carp's excited. Carp's excited. The entire team was excited, and they deserve to be because they put up the numbers that they needed to put up. Here are the highlights of the numbers in the context of U.S. commercial. This is what was really growing the most. 55% year-over-year revenue, 83% U.S. commercial customer count. So obviously the deals in the United States are closing dramatically. 123 commercial deals closed, 103% U.S. commercial remaining deal value up year over year, and then 262 U.S. commercial total contract value, which is up 152% year over year. U.S. commercial, more than government and more than international government or commercial, is what's taking this business to the next level. The boot camps, the willingness for the United States to actually embrace AI and the corporate customers in the United States to say, hey, we need an AI strategy. All of that is scaling dramatically. And when I mean dramatically, I mean like we're seeing the growth accelerate to the levels that really you need it to accelerate for SaaS companies, especially to the levels you need it to be at if Palantir is going to be sitting at $29-30. So it's getting there, and it's getting there in a way that's organic. It's getting there in a way that's real, and it's getting there in a way primarily from providing value. And that value in and of itself, I think, is bleeding into all the customers that continue to want to deepen their relationship with Palantir. And as a result, we will probably see more customers continue to stay. And the one thing Carp said in his shareholder letter was that people thought you couldn't create transformative software. That's what Palantir is doing. That transformative software doesn't just last for a day. It lasts for decades. And it lasts with thousands of clients eventually continuing to pay you because of how important that software is to their enterprise. He also talked about the operationalization of LLMs and how you need an ontology for that. Did a really good job kind of making that more cohesive in the shareholder letter and explaining to the market, if you want to buy AI, you have to understand the concept of an ontology. The street still doesn't understand the concept of an ontology. This is what Carp said at AIPCon at the Yahoo Finance interview. And slowly the street will understand that a lot of this LLM shit, by the way, the co-founder of OpenAI left yesterday, took a leave of absence while AI is taking over the world. Greg Brockman left. It makes no sense. A lot of weird shit is going on for the premier AI companies, but for Palantir, that by some people isn't even an AI company, they are seeming to be the premier AI company that's actually unlocking value of AI in the enterprise. So overall, just an incredible quarter. Just an incredible quarter for Palantir, and a quarter that we all needed to continue to see the momentum in the context of the broader growth story that Palantir has. Amit, can you elaborate on the automatic shelf offering? So I have not gone through all of the details and the 10Q and all that stuff. Last night was a long night. I only got to go through the top line numbers. I'm going to go through that. From my understanding, a shelf offering is basically when the company is able to dilute shareholders, which is why it's on a shelf, right? They're allowed to do it whenever they want to do it. And so I don't even know how much they put up in dilution. I think, if anything, it's consistent with what they had in the beginning of the year that they told us, which is about 250 million shares. So there's a lot of details in that. We're going to go through all those numbers, and Palantir Weekly this Friday, you'll get all the details we didn't get from the presentation itself. But at its core, dude, the top line growth is what matters. Everything else is, just noise at this point, because And by the way, I think all of us, myself included, and other Palantir bulls said, all right, it's time to put up the numbers, right? Like, we've heard a lot of the philosophy. We've heard a lot of the providing value. Now it's like we really need to get above 25% year-over-year growth, and we kind of have to get to 30% if we're going to maintain this multiple. There's no way we're going to maintain 25 times price to sales if we're not growing a minimum of 30%. And this was a quarter where the stock was up 20% after hours, because not only does Palantir get a cool premium, and if they do really well, the street's going to get excited for it, but they actually did really well. And the numbers justified the momentum on the volatility for the upside, which is why we saw more excitement for Palantir. Finally, real quick thing on Palantir before we move on. So the stock price right now, and again, I'll do more in my deep dive video when I post that later today. Stock price is up 11%. At one point, we were at 28.40-ish or something yesterday. I don't know what happens to the stock, and we got to do a lot of macro analysis to kind of see where the stock hits up. Yeah, we were at 28.79 yesterday after hours. I think, look, if the macro switches today and we actually continue to rebound off this Japan stuff that happened yesterday night, I think $30 is a real possibility. Now, do we get there today? I don't know if today's the day where we break that psychological barrier, but I do think people buy the stuff. Like, I think the street's like, all right, this is the real deal. We're going to buy. So I think $30 is possible. I think that could happen today. If the macro kind of clears up a little bit and we start to see other companies reverse and get back to their previous levels and Palantir kind of maintains 26, 27, I wouldn't be upset with that, because 27 itself, I think, is a very fair price for Palantir in terms of the multiple it's getting. It's still getting a premium. And I think it would be, it would at this point become a legitimate buy the dip if it even goes below 26, and it would become a base. And we saw it coiling up between 27 for 3 weeks before we had the NASDAQ fall 10%. So it's kind of just going back to that level where it stays at, which I think is a very healthy level. We're going to see when the market opens, but I think there is a real chance 30 happens if the macro holds up, and we'll talk about more about the macro. But if it does, we'll see where the black box unknown AI company ends up going. So exciting stuff, dude. Exciting stuff. Does yesterday confirm September S&P inclusion? It's not up to us. It's up to the S&P committee. I think if the CrowdStrike fiasco happened before they got into the S&P, they probably wouldn't have put them into the S&P, because obviously that was a big deal. But CrowdStrike beat us last rebalance. I think it's possible for us to get into the S&P. Really, institutional ownership is, I think, what the committee cares about for December. But I mean, I think the institutional ownership is going to go up. So I think there's a shot we get in September. And if that happens, then that's just more. I mean, that's one of the best 2024s you could ask for Palantir. So we'll see. We'll see if it happens. But so far, no confirmation on the S&P 500 for Palantir. Going to block you for like 3 days every time you say black box. So, I mean, this is the thing, right? So many people felt Palantir was a black box. And slowly, the world's starting to recognize, no, dude, it's actually not that hard to understand. Companies have data. You need AI to make sense of that data. You need an ontology, which just structures your data. You put that together. That's what Palantir sells. And then they've got a rock star CEO who's preaching the vision everywhere he goes and getting people to realize how important they are. So really, I think the best way to understand Palantir, the best way, is to listen to Stephen Cohen's talk from 2011. It was at Stanford. I know some of you guys, OGs, have watched it. But he talks about where Peter Thiel came up with the enterprise data management problem after his days in PayPal, and how he thought of it philosophically from the government perspective to be able to solve that. So Peter Thiel, again, just genius, realized 20 years ago, enterprises were going to have a massive problem over the next couple of decades with managing all the data that they were creating. And he realized that because of all the data that he ended up amalgamating at PayPal. And as a result, that's where he went to Karp and Cohen and Lonsdale and said, hey, like, maybe there's something we can do about this. Maybe there's a business here. Let's do it in the government. Then we'll get to commercial. And then 20 years later, it's a company that's going to do $2.7 billion in top line revenue. So exciting stuff in the context of Palantir. All right, so I'll talk about Robinhood as well. Robinhood, nice little rebound in the pre-markets. I added Robinhood yesterday. Robinhood 17.18 right now. I mean, it looked like the dip on Robinhood below 15 lasted for a day. Really lasted for a couple minutes yesterday. Now it's at 17.18 in the pre-markets. Now Vlad's up next. We had Karp do his thing. We got Vlad up next tomorrow. We'll talk more about my Robinhood preview, but I think Vlad's going to crush it. And I think this price is stupid for Robinhood. And I think the street's going to react to that if the macro holds up as well. So we've got to see if the macro holds up. But if they do, Palantir right here, 26.94. Uber up 8.9% as well. Then I think things can go very, very good in the context of Robinhood. S&P right here up 0.49% at 519.9 on the day as well. Kamala Harris just picked her running mate. So Kamala Harris, this news just broke. She officially picked her running mate. It's a dude named Tim Walz. Does anyone know this guy? Tim Walz. Who the heck is Tim Walz, dude? Tim Walz, governor of Minnesota. He is now the VP pick for Kamala Harris. Minnesota is one of the more liberal states in the nation, if I'm not wrong. Okay. I don't know who this guy is, dude. I thought she was going to pick Pete Buttigieg. She didn't pick Pete Buttigieg. Thought she might have picked Gretchen Whitmer. She didn't pick him or her. I don't know who the fuck Tim Walz is, dude. I don't know. I don't know who Tim Walz is. So I guess we're going to hear from him further in the future. But yeah, that's Tim Walz. Anyway, moving on to other things that are much more important. So macro. Let's talk about what the hell is going on in Japan. So the Nikkei index last night was up 10%. And as you can see right now, it's up 10.23%. This was a bit confusing. This was very confusing. Why was this confusing? Because the Nikkei index had its worst day since 1987. And so that's why the stock market collapsed in the United States. We obviously talked about the yen carry trade, all that stuff, right? So it was bad. It was not good. And then last night they went up 10%. So if you look at it over the past 6 months, still down 4%. That was the nasty fall you saw from 39,000 all the way to 31,000. That was bad. Now we're back up to 34,000 on the index. Now, last night they hit a circuit breaker to the upside. You know, you hit a circuit breaker to the downside because too many people are selling. Last night the futures were so heavy that too many people were buying, and they had to like halt trading because there was too many people that were actually buying the index. I am deeply confused why the Nikkei index continues to go up. We'll talk about Celsius and Uber in a second. Celsius and Uber both crushed it, showing that the consumer maybe not as bad as what people think. But I'm curious if anyone has any thoughts on why Japan is up right now. There's a couple of theories. One argument is it hit some technical levels that had to retrace or had to rebound. That's an argument. Another argument is that Japanese investors just bought the dip because it's like if the S&P went to like 4,700 right now, like obviously some people would come in and they would step in and buy, and they would be excited to buy because those would be cheap prices. So that's kind of the argument that we're seeing right here, is that it just got too cheap to buy and people wanted to take advantage of the dip. Another argument I'm seeing is that real wages increased in Japan yesterday. Japan workers' real wages rose for the first time in more than 2 years, brightening the prospects for a recovery in consumption and the emergence of a positive growth cycle long sought by the Bank of Japan. And so when you have your Japanese workforce starting to be more productive and earn more money, and they can obviously spend more money as well, that is one thing that's helping the broader Japanese economy. And you're seeing that in terms of momentum from labor statistics in Japan with monthly real cash earnings year over year. These are the only three reasons I have for why this index is back up, for why Japan is rebounding. It's like technicals, investors buying the dip, and maybe real wages going up. I tried to find out on Twitter last night. I tried to crowdsource from other people. No one knows why this. I mean, the only other argument is manipulation, and like this is like the dead cat bounce before shit really hits the fan, which I don't know if that's the case. That is an argument you can make. I just don't know if that's necessarily the argument you think is like the best argument. And here's why. The reason why is because of the VIX. So I looked at the VIX last night. The VIX hit a level it hasn't seen since 2020. Only 4 times in history did the VIX hit the level that it hit yesterday at 65. If you looked at what happened in 2020, the S&P bottomed the same day the VIX spiked. The S&P bottomed on March 20th, 2020, and then everyone knows what happened after that. The VIX spiked 200% on March 20th, 2020. Historically, after the VIX collapses the day after spiking, and not just like the VIX was up, the VIX spiked. I mean, the VIX hit a level that we have not seen in 4 years. When that happens, and the S&P was down 10%, went to 507 last night in the pre-markets when the VIX was up 180%, then you potentially see a bottom on the S&P. So I am hesitant to say it's a bottom because there's so much unknown about the labor market, the yen carry trade, all that stuff. But if you just look at it historically, when the VIX goes up and the S&P goes down, and it happens in such a violent fashion, we tend to bottom. And if that was the bottom at 507 on the S&P and buyers are now stepping in, a lot of these equities that are mispriced, aka a Robinhood, they're going to start to go back up because they have no business being down here given the growth that they're showing. So maybe we are clear. Now, I hesitate to say that again. There's a lot of other factors to it, but if the VIX is any indication of that, then potentially we are clear, or at least we've at least begun the process of potentially developing a bottom. And if we have developed a bottom, now it's just a question of how long does it take to rebound. Again, I don't think it's going to rebound overnight. I think tech. Oh, and here's the other thing about making a bottom. Tech is corrected. You know, it's hard to make a bottom when you haven't had a really, a bad move to the downside. Tech has had a 10% move to the downside in the NASDAQ, and each individual tech stock is down more than 15% in terms of big tech stock. So you could argue that, hey, big tech has had a horrible month, and now it's just a question of valuations normalizing if Japan is back on track, which would overall help the broader market. Cool. So that's what we got in the context of Japan. Some of the stuff you guys are saying is that manipulation of the currency. Japan is about to about the carry. Japan is all about the carry trade. They're about to carry the trade. Yeah, I like, dude. I admitted last night I have no idea why Japan is up 10% outside of people buying the dip. But if that rebound is real, U.S. dollar over Japanese yen stabilizing, we're gonna start to see a little bit more momentum in the United States markets and not have hopefully the violent downswings we had a couple of days ago. All right, Uber's a big sign on the consumer. They reported earnings. Let's get their results and keep going from there.
Of all of this. So let's talk about this past quarter, but let's also talk about where you think things are headed.
Well, Andrew, I think our results that were incredibly strong speak for themselves. We had gross bookings of $40 billion, up 21% year on year, which is very similar to what we had last quarter. Chips growing 21% as well. Record adjusted EBITDA of $1.57 billion, up over 70% on a year-on-year basis. And it translated into free cash flow of $1.7 billion. So the company is really hitting on all cylinders. And what we see for the consumer is the consumer remains strong, especially in terms of their demand for our services. Past the pandemic, the consumer spend.
So Uber is saying, hey, we don't see a problem in the consumer, which is nice to see. We'll talk about Celsius in a second, but at least Uber is saying, yeah, we are not really seeing this massive consumer weakness people are talking about.
On services continues to be growing at higher rates than consumer spend on retail. And that's absolutely showing in Uber in terms of our performance now and our performance going forward. And we've also looked at, different income cohorts of consumers as well. For example, lower income cohorts of consumers, they're actually growing their spend faster on our marketplace than higher income cohorts of consumers as well. So even when we dig to see, are there any early signs of weakness? We don't see any early signs of weakness as of now, although we're always on our toes to be able to perform. Do you think of yourself?
We're not seeing any early signs of weakness now. I mean, I know Hershey said they're seeing weakness, but Uber, maybe travel is just more important. At least Uber CEO, really nice to see the CEO come out and say, hey guys, we're fine. There's no recession in Uber. And so maybe more comments like that from CEOs are also going to help the market internalize that the consumer may not be as bad as they think they are.
Then as a barometer of what's happening in our economy or around this country and frankly the globe, given just how international the business is, or do you think that you're living on an island and it's an idiosyncratic island and we shouldn't take too much away from it except to say that it's working for Uber?
Well, with 30 million trips a day, it's a pretty big island. But I would say that we've consistently proven that we can grow faster than the category. So I think that's something to take into account. We're the largest player. We've got the best technical capabilities. So I think we will do better than the overall marketplace. And I do think that there are certain elements of Uber that are countercyclical. When the job market weakens, we get more drivers on the platform. We've got 7.4 million drivers and couriers on the platform.
So Uber CEO is not saying the consumer has problems. If you look at Celsius earnings, Celsius also showing some pretty incredible growth. So Celsius in the morning, and then we'll look at Caterpillar because that's a big one as well. Celsius beat revenue by 16.7%. Beat EPS by 16.6%. Revenue, they slightly missed by 0.12%, but overall, their growth remains above 50%. Celsius stock in the pre-markets, up 3%. Not a big move, but it's not down 3% on sales weakening or growth slowing down. So Celsius, continuing to do okay. And that's not bad. Bay Ray says, I'm legit a quarter of their sales alone. Yeah, you got people like Bay Ray that drink 3 of these a day. So the Celsius, showing that the consumer is still healthy. Outside of Celsius, we had Caterpillar. Caterpillar missed revenue by 1%, beat EPS by 7.35%. Caterpillar, very important company for the consumer with all the goods they create. Caterpillar is down 1% in the pre-markets. Yeah. And it's like, it's how much was it up year to date? It's probably priced nicely. Well, yeah, no, it was up 273. Yeah, it was up year to date. It was up almost 10%. So a down 1% in the pre-markets doesn't really matter that much, right? So it's one of those things where it's like some companies are showing they don't have that many issues like Hershey's did or McDonald's did. And either that's going to be a trend this week and next week, and the market will start to feel a rate cut's going to resolve the concerns about the consumer, or this is just masking some of the broader issues we have with the consumer and the Fed. This is going to hurt earnings in Q3. The thing is, even if the Fed cuts rates in September, if the consumer truly is in a horrible situation, then the market's just going to ask itself, all right, well, companies are not going to put up the same numbers they put up in Q3. If they can't put up the same numbers they put up in Q3, why are we giving them these multiples if the consumer is not spending, even if the Fed is cutting rates? And that's where things can spiral into a worse situation. So we're really going to have to see what happens with the consumer. But so far, it doesn't feel like the consumer is necessarily in the worst position. FYI, Shyam will be on 11 a.m. Eastern on Bloomberg. So Bloomberg tweeted about this last night as well. So they're going to have an interview with Shyam, and Shyam's probably going to explain a little bit more about this new product that they launched, the Warp Speed. Very, very excited for that product. Again, this will be a brand new product Palantir's putting out. We saw they put out Mission Manager last quarter as well. There's so many different things and updates. I mean, FedStart. We barely have talked about FedStart in the past couple months. There's just so much going on that's contributing to this 27% year-over-year growth. And now we have a brand new product, and we're going to see how that product adapts to the American manufacturing base. And it makes a lot of sense. If you read any of Shyam's articles over the past couple of months, like American manufacturing is something he cares deeply about. I was at the DC AI conference. I got to see him speak about this very topic. And if they can reindustrialize American manufacturing via software, like given some of the stuff they're doing with Panasonic and a variety of other companies, you might really see the next leg of growth for Palantir in the United States, because American manufacturing needs to be revitalized, given how horrific it's been over the past 30 years with a lot of manufacturing going overseas. Here's Shyam on the earnings call as well. I think I have this video pulled up. Do I have it? Yeah, this video about Shyam talking about what differentiates Palantir from their other AI competitors. And then we'll get into some more macro stuff.
All of the value and where the market is completely bottlenecked is on that transition from prototyping to production. And that happens to be the place that we are most differentiated. That differentiation is built on more than a decade of deep technical investments, technologies like the ontology, OSDK, the primitives that we have that permeate the platform, security, functions on objects, actions, write back, machinery, automations, and a deep product pipeline that really is focused on addressing this very problem, on this transition from prototyping to production. And I think when you think about the ChatGPT moment, it so very clearly invalidated the thin product playbooks of the past. I think this bottleneck is doing that same thing to AI software. It is so easy to create an AI prototype, the equivalent of effort of making a PowerPoint slide, but it's actually very, very hard to get that in production, probably 10 to 100 times harder than traditional software transitioning to production. And therein lies our entire opportunity in the market. That's what you see with the expansions that have happened with Panasonic Energy and Tampa General. And that's what you frankly see in the numbers of this quarter.
So you can see right there, Shyam kind of just being like, hey, man, the numbers speak for themselves, dude. When you have good numbers, you're able to, it's one of those things where you're like, it's like, you know what? It's one of those things where when like you've got the juice, you're able to drink it, right? It's like when you're good, you're good. And the way you speak when you're good is just a different level of speaking. And so I think it goes for anything in life, whether it's on a public earnings call and you put up the numbers this quarter and you have a little bit more pep in your step. I even asked Vlad about that last quarter when he was on my channel. I was like, so he seemed a little bit excited in Q1, and he even acknowledged like, yeah, like we had a good quarter. So I'm going to be more excited. He said he listened to some music preparing for the earnings call. Like it's one of those things in life where when you've got the goods, now it's just a question of everyone else recognizing how strong and good you are, and being humble about that, but also remaining firm and adamant in your stance and in your trajectory to make sure you're not complacent. I think that's one of the most important things for a public company, and obviously Palantir is showing that off right now. Okay, so AI is super important. AI has to go beyond ChatGPT. One of the use cases of AI are humanoid robotics. I've invested in a company that is engaging in the build out of humanoid robotics. And hopefully that company makes me rich one day if they ever go public and become really big. But here is Figure that just announced their latest robot, the Figure 02. Here's a 2-minute video. And this is their newest entry into the humanoid robotics market. There it is in BMW, actually doing shit. That's kind of cool, dude. It's autonomously like putting the parts of the car together. This is stuff you would pay someone to do. The robot's doing it. It's pretty incredible, dude. It's pretty amazing. So there you go. That's what you got on Figure. Brett Adcock, the CEO, he just put out some stats on it right now. This came out this morning, like an hour ago. So meet Figure 02. Figure 02 is a ground-up redesign to achieve 6 cameras, 50% battery, onboard VLM, 3x CPU over GPU, 4th-generation hands, integrated wiring, exoskeleton structure, speech-to-speech reasoning. And then he gets into all the technical elements. They're using OpenAI to power the reasoning in the LLM inside of the robot. The onboard VLM, the vision language model that's enabling semantic grounding and fast common sense visual reasoning from robot cameras. I mean, dude, this space is moving quick. A custom in-house designed battery in the robot torso to deliver 50% more energy to maximize the robot runtime, integrated wiring. Like, this is a big deal, bro. And like, whether you care about Figure or not, it just means this space is, I mean, Tesla's probably working on stuff like this that's even stronger, and we'll see when Tesla puts out their updates. But again, Elon, if you believe in Tesla, you've got to believe in robots to an extent. Elon said Optimus is worth $25 trillion to the company one day. If Optimus is a $25 trillion market cap besides FSD and everything else, I would imagine Figure and some of these other companies, if they continue to execute, what, 1 trillion, 2 trillion, 3 trillion. Again, the unit economics on robots is hundreds of billions in net income. You're replacing a labor force, and you are, quite frankly, giving labor to companies that have a massive churn rate. Some of these companies have a 150% churn rate. They just can't keep these people because these jobs are not jobs that people want to do. And they're cheaper. You don't have to worry about healthcare for these robots, right? You don't have to pay them an hourly wage. You buy them once, and you're able to get a lot of ROI from them over the lifetime. Every single company on the planet, BMW being one of those companies, can benefit from these robots. I don't even care about robots in a consumer perspective, like having a robot do your dishes. I care about how much enterprises are willing to pay for millions of robots inside of their warehouses. And I think that TAM, like, that's gigantic. So it is nice to see that progress is being made, and the progress is only being made because of AI. That is, robotics are one of the core use cases of AI that I think will really match its momentum over the next decade. And it seems like Figure is taking the next step to continue building up to it. So exciting stuff. Exciting stuff in the context of robots. AI plus robotics equals something that does a better job than most labor workers. It's cool, but probably will take jobs away. Yeah, it's 100% going to take jobs away. But again, there is a labor shortage in some of these manufacturing jobs. If you go deeper into like the studies around why there's even a need for robots, why companies are even willing to pay so much money for these like concepts, is because they know that they're not going to have these many workers over the next couple decades, and they need a solution for that. And that's where you get humanoid robotics as well. All right, so that's what we got there. Let's go back into the pre-markets and see. Oh wow, we have 5 minutes until the market opens. All right, time just flies by. There you go. So we got 5 minutes. I think all eyes today are obviously on Palantir. Palantir right here, 27.27 in the pre-markets. I think Dude, I think there's a chance. I don't know. I hope I'm not being too exuberant by saying I think $30 is very possible. That is a quarter where if Palantir had stayed at 27 and we didn't have this meltdown over the past couple of weeks, we'd probably be $30 by now, because we would definitely get, I feel, a 15% move after hours. If we were in the 28s and 29s, we were at 24, which is why we moved up to 27. But if we were at 27, I think we would have got closer to 30. So let's see what happens. Any big move, the only fear I have is that because Palantir is up so much year to date, the sustainability of that move is going to be tough, given we're not out of the blue yet with the macro. Or maybe today's the second day of a reversal. I mean, yesterday, basically at 10 a.m., we started reversing from the lows. So if today's a continuation of that and we're just getting back to where we were before this collapse happened, then maybe Palantir is going to act like it never went to $21 yesterday and it just keeps shrugging along. So I think we're going to really see how much momentum the market has to give these companies a premium, but also if the market itself can rebound after what was one of the largest volatility spikes since 2020. So we'll see. What about Google antitrust ruling? Yeah, so Google lost their antitrust ruling. That was not good for Google yesterday. Google's up 0.11%. Look, I mean, when you become this big, it's really hard to win against the DOJ, even if you have the best lawyers in the world. If they want to take you down, they're going to take you down. So I don't know exactly what the implications of this are going to be on Google's business. I'm sure we'll find out over the next couple of days. But definitely not good that they lost that antitrust case. And now, for them to do an acquisition or for them to try to maneuver their way around Washington, it's just going to be tougher after you lose a case like this. And Apple as well, in the same position right now, getting sued by the EU. Apple, by the way, this stock really, didn't get hit too much after Berkshire. They're down 1.2% in the pre-markets, but the Berkshire sell was bad from a perception perspective. Overall, still maintained the 200s. It fell to the low 190s yesterday, and then it rebounded. We'll see what happens as it further concludes. The one concern I have about Apple is that if the consumer is weak, no one's upgrading to some AI iPhone. Palantir right here, 27 to 23. And we've really got to make sure the segment of the consumer that Apple thinks is going to be able to upgrade actually does upgrade, because if they don't, that's the only kind of bull thesis the street has right now on Apple. What is Palantir's PE now after this earnings? So I think their forward PE is 70. Their trailing 12 months is 138. So it's come down from 220, which is not bad, obviously. And I think it'll continue to come down to more reasonable multiples as the growth. Like, I don't think we're going backwards is what I'm trying to say. The growth was 27% this quarter. What do you think it's going to be next quarter? They're going to beat again. I mean, now it's getting to the point where Palantir, almost 4 quarters in a row, they've beat and raised. And when you get the reputation of being a company that beats and raises, Wall Street really starts to like you, because they know that they can expect more from you. And you're a big boy now. You're able to show that, hey, we're going to put up some real numbers. I mean, they got it for $700 million next quarter. In the next few quarters, they're going to be doing close to 850, 900 million a quarter. You talk about 2 years from now, they're doing $1 billion a quarter, maybe even 1 year from now. It's getting to the point where the growth is there. And we know the opportunity is there. It's not like this is going to stop anytime soon, primarily because every single company in the world needs an AI strategy and they need to know how they can operationalize AI in their enterprise. And so if Palantir wins that market, it's going to be very exciting for their overall trajectory in the next few years. All right, here we go. We got 10 seconds. Let's see what happens in the market, what happens to the rebound from a macro perspective, given Japan, and what happens to Palantir. It is Tuesday, August 6th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Palantir 2709, up 12% on the day, maintaining that 12%. Let's see where it goes, but we are green on the day for Palantir. Palantir right now, 2715. All right, so going up a little bit, 12.7%. 2717. Again, levels that we were at a couple of weeks ago. So nothing too crazy, but nice to be back at these levels as well. 2717. Okay, so we'll go back to Palantir in a second. Google at 159, Microsoft at 399, Apple taking a beating, down 1.6%. S&P is green, 519. Uber's up 6%. Carnival Cruise is up 0.6%. Robinhood 1687. They're down from that $17 level. They're up 2.25%. Rocket Lab $4.75. Meta at 483. They're up 1.4%. Nvidia bottomed at 92 yesterday. They're at 103. SoFi at 648. Palantir 27.26. Now seeing a little bit more momentum, up 13% right now on Palantir. Yeah, the PE ratio, guys, sorry, it's actually 200. It was giving me the wrong PE ratio on what I was looking at Weibo. The trailing 12-month PE ratio on Palantir is 214. I think it was 230 going into this, so it's come down not by half, but it's come down by 15 points, which is still good. But the PE on a TTM is 214, and the forward PE is 82. Okay, Palantir now getting a bit of a red candle at $27. Yeah, $27.42. There's the red candle right there. Carnival Cruise at $14.47. Entire market starting to sell off a bit. Coinbase goes red. Snapchat 880. Snapchat's down. TQQQ is up a little bit, but still a red candle. We are seeing red candles everywhere. ARM at 114. There's a red candle there. CleanSpark 1222. By the way, CleanSpark, I think below 13 is like not a horrible deal if you're bullish on Bitcoin. So CleanSpark at 1222. Bitcoin itself at 5517, which was a nice rebound from 49,000. I mean, dude, we hit 49,105. Now it's at 55,000 in about 24 hours. So not bad at all. For that, S&P is still green, 519. The NASDAQ is green, almost up 1%. IWM is up 0.13. So small caps are underperforming, but the NASDAQ and S&P is still going up. Robinhood 1655. So Robinhood is down at 0.85% up on the day. So it's still up. Yesterday it closed at like 1643. But it is down from that $17 level. Microsoft at 401. Palantir, okay, Palantir now falling. Palantir 2677. Again, still up 11%. Palantir would have to go to 24 to lose most of its gains. But it is getting rejected at that 27.5 level. And again, this is what I meant. Like, until the broader market kind of shows, all right, we can move forward, I think it's going to be a little tough for Palantir to break through that 27.28 because that is a healthier, or that is a stronger of a multiple that the street may not be able to justify yet if the macro sucks. Again, Japan rebounding last night. That is the reason why I think U.S. equities are doing good. S&P at 520, up 0.55%. QQQ at 439. Palantir's on CNBC. Okay, let me pull that up. They're probably talking a bit about Palantir. All right, overall, not a horrible market, even if not going up super high. Let's pull up CNBC real quick and let's see what they're saying as well.
He has a kind of an odd conference call, but it's always exciting. But what I thought was
sure
most
it is for him
important
in particular. It sounds like.
Well, no, he's saying the opponents are actually doing it, but the AI here, it's all AI, and movement's all AI. So we have this one scheme. We have a scan of thought from journalists, which just say, look, AI turned out to be a joke, and NVIDIA up 1,000%. What was that all about? I'm dead. That's over. And then we have Alex Karp talking fantastically about AI, and Movement having $5 billion in AI orders. So is it really a joke? Is it really comical? Is it that comical?
Of course not. Listen, we've made this point many times already during every single earnings report that we got last week and the week prior from the hyperscalers.
Right.
None had any plans to cut back on their CapEx. In fact, they only were increasing it.
So why don't we
What
talk
also
about
is
that?
increasing is at least some doubt creeping in about the ultimate return on that invested capital. That said, you know, the reaction I got today from one investor in Palantir, the AI trade is real. That was their reaction to these
and
numbers.
the critics are engaged in they're self-pleasuring.
It is hilarious to see Kramer say self-pleasuring.
I don't know what to say.
Are you quoting somebody?
Yes,
there?
I am.
Okay.
Alex, he did not curse. I was very angry at him when he cursed, and then it got back to him, and I was angry. But I said, I have a lot of kids who watch the program. All right, the quote
Don't go
says,
knocking his hobbies. That's a line
this guy,
from an old Woody Allen movie.
Don't go.
All right.
Don't go breaking my heart.
Yeah.
We're going to play a determinant role in making Americans allies again in the world. Dominant. They closed 27 deals of more than 10 million. Is AI really meaningless? I do kind of love him. He founded his company, David, to be a ray of light to America. And what does he really have? He has what's called production charisma, according to Ryan Taylor, the chief revenue officer. It's production charisma. Now, Dave, that's the first time I've heard of that. I didn't get to ask Mr. Cantor about production charisma, and that would have influenced justice, or is that go to FTC? Because that's better than the self-pleasuring that I'm reading about. Dave, what is
Oh my God. You try to get some quality analysis. It is not easy listening to Kramer talk about Palantir. And again, the problem with Kramer talking about Palantir is he doesn't really understand the company. Like a lot of companies, right? I don't blame him. I know he's on TV, but like when you don't understand it, it's just you just don't really know how to talk about it. So Palantir right here, 2642. The point is they're getting coverage on CNBC, which is a good thing. Shyam will be on Bloomberg in about an hour and 30 minutes. But getting that coverage is so important because they're continuing to expose themselves to new investors, which is relevant for Palantir growing their investor base. Palantir 2643 up 9.9%, Celsius up 2%, Uber 61 up 4.5%. Nvidia at 102, so that's falling a little bit. Robinhood's still getting smacked right now. Robinhood 1632. I think these prices are absolutely stupid. I think after earnings, if they have a blowout quarter, this thing can be back to $20 to $22. We'll see what happens if the macro is able to hold up with it. But so far, broader market is selling off just a bit. HIMS, I don't know why HIMS is down 7%. They raised guidance. They had a monster earnings. I don't know what's wrong with HIMS and why they're down, but HIMS is down. So not sure why that one's not really doing the best. Lucid got another 1.5 billion by Lucid got another 1.5 billion by the Saudis. So the Saudis continue to pump more money into Lucid. I don't know how that's going to keep helping them, but they're up 10% because of that. At this point, they should just take the company private. Like, I don't even know why the company's public if they're going to get $1 billion every single quarter by the Saudis. Intel's up 1%, PayPal up almost 1%, CrowdStrike just went red. Tesla 196, the Tesla below 200. That's not good for Tesla. Reddit 55.75. Regional banks are down today. Verizon's up. Chevron's up. Oil spiked a little bit yesterday. Oil's down again. 72.39, folks. Oil went down another 1%. Look at that. Wow. Oil was at 76 yesterday, so it really did come down. Spotify 322. Robinhood 1627. Again, Robinhood getting smacked. And then Palantir 2621. So Palantir still holding 8%, which given the sell-off we're seeing across the board, not dramatic, but still is a sell-off. We are lucky to maintain this level right now. But I think the thing is it's easier to buy the dip today because you saw the results. And I mean, if the thing goes back to 22.21, I think it's just a no-brainer given the results that we saw. Palantir right here, 26.27. Google is officially down 1% after that antitrust lawsuit they lost. S&P at 519, QQQ at 437. The S&P and the Qs are trying. They're really trying to maintain this momentum. But it looks like they want to sell off. It looks like they want to go red, but they're trying. They're trying to stay green right now. Portfolio still up 6% over the day. Yeah, it's weird, dude. Some of these stocks are going to start, like, look at Robinhood, just went green after going red. Like the Robinhood dip yesterday at 1398 was criminal, went green, and it looked like it was clear skies this morning, and now it's going red. Well, why is it going red? Well, the broader market is down a little bit, so Robinhood's going to go red. I think this is a dip that's just like the Robinhood. This is like Palantir at like $18 in my opinion. Like this is just a dip that's just such an easy, like, all right, I'm in. Like this is not too worrisome. But then it's a question of, well, can the S&P hold up? If the S&P goes back to 507, Robinhood's going back to 13, if not lower. Palantir is definitely going back to 21. So a lot of stuff is contingent on the indices right now, and those indices are contingent on Japan. And based on the current performance, 10 minutes in, it does not look like they want to go that much higher. They're getting a lot of rejection at these early levels at 519.50 on the S&P. So let's see. Let's see if they can have a little bit more recovery. LMT, yeah, so Lockheed Martin is going up. All the defense contractors are doing well. We are seeing a little bit more demand for them, given some of the geopolitical events of Raytheon, Lockheed Martin. They're both up 1%. Now, a lot of people were speculating last night, hey, today might be a face-ripping rally. And the reason today might be a face-ripping rally is because now the markets have officially priced in the end of this Japanese yen carry trade being blown out or unwinded to such a degree, which maybe it still is going to be bad, but if it's not, you can move past that. And if Japan is rebounding, then you also can start to move past that as a reason to sell off U.S. equities, which means if that's the case, there is an argument for a pretty aggressive rally today. We're not seeing that yet. Maybe it happens later in the day. But companies put up numbers today on earnings. Celsius, Uber, Palantir, Caterpillar all put up great numbers. It's not like companies' earnings growth is declining. It's just going to be a question of if their stock prices can reflect some of that pain as well. HIMS is down 10% besides great earnings. Yeah, I'm not sure why HIMS is down 10% on that. I thought they had a pretty amazing earnings as well. So Let's see. Palantir volume. Where's the volume on Palantir? Palantir volume, 17 million. Yeah, 17.9 million shares. That's a lot. Oh, Palantir just went below 26. I think if we can hold 26 for the day, given right now the rally looks a little subdued, S&P is very close to going negative right now at 518. Then that would be good. If not, then we might go under. And it's not a problem with Palantir earnings, dude. Those earnings, if you're just joining, if you didn't look at any of the earnings, those earnings were phenomenal. And I'm pretty objective about it. I would say if those earnings were not good. So those earnings were pretty damn good. 2580 on Palantir. This is more macro. This is more of the market feeling there's still a little bit more pain left before they can flush out everything in the system. So let's face ripping is good. Face ripping is not bad. Face ripping is good. Admit it took me a year and a half for Robinhood to turn it around, but I can't stick it up for that no trading last night for Hood. My brain is silently screaming not enough liquidity. Okay, so let me address this real quick. The reason Robinhood turned off 24-hour trading is not Robinhood's fault, and it's not even their third-party Blue Ocean, which conducts the overnight trading partner's fault. The person whose fault it is Schwab and Fidelity and E-Trade, etc. Robinhood cannot conduct a volatile 24-hour markets where millions and millions of people are trading and selling and buying the dip, etc. if they don't have liquidity. They don't have all the shares in the world. They need other brokerages to participate to create a growing ecosystem. Apple, by the way, down 3%, Apple getting hit, of shares being traded in and out. That's why during the regular trading hours, 9:30 to 4, you have a lot of brokerages all across the world participating, which gives you the liquidity. If Schwab is not going to innovate, and Schwab can't even get their app to log in for people, if they're not going to innovate, if Fidelity can't innovate, then you can't expect Robinhood, where they know, oh, this is going to be a really volatile trading market. We probably shouldn't keep it open if we don't have the liquidity. The way you get the liquidity is if other brokerages participate. So I don't think this is Robinhood's fault. I think their argument is we can't continue to offer this service, which a lot of people love, which is 24-hour markets, if we don't have the support from the broader ecosystem. And we can only offer it if we know it's not going to be like ridiculously volatile, which is why they've offered it for the majority of the year, except out of 2 days, they haven't offered it. And I think it's up to the other companies to help them out. So if other companies join and they actually start helping, then I think we could have 24-hour markets forever in the stock market, just like crypto. But Schwab, Vanguard, they don't want to do that. And if they don't want to do that, then I think Robinhood's not going to get help to be able to maintain that. Shopify 52.72, Verizon at $40, Chevron at $144, MicroStrategy at $12.70, Coinbase at $184. The Coinbase 177 dip yesterday was a nice dip. That one lasted very quickly, and then we rebounded to $190. As Bitcoin goes up, I think Coinbase will get back to that $200 level as well. So Hood thinks the market will never be volatile. Got it. No, that's a misexaggeration of what I'm saying. Hood obviously understands the market is volatile, but when you have markets going up or down 30%, like the entire index, like, yeah, you're not going to be able to offer something that's only available to a set amount of brokerages, which is 24-hour markets, overnight. So I think it was smart for them to turn off 24-hour trading. First of all, it's the only brokerage that does it. Second of all, it's like, hey, if we do this and then shit goes bad, we're going to get even more blame. So we'd rather not do this because we have no other support from the industry and just like have people trade in the regular trading hours as normal, right? It's not like Schwab's offering you 24-hour and you're not able to access it on Robinhood. So I think it's the industry problem. And as the industry changes, we'll see more momentum there as well. Hims mentioned margin erosions. Okay, so maybe that's one of the reasons why Hims is down. I know they increased top line growth at 50%, and they introduced a $100 million buyback. They introduced a bunch of things. They bought a small company. There's a lot of different things they did. Yeah, I thought it was a good quarter. So I'm surprised that Hims is really not getting the benefit of the doubt right here, down 6.8% on the day. S&P at 518. Let's look at the Mag 7. Wow, Tesla 193, Nvidia 70 cents away from going below 100 again. Oh boy, Google at 158, Amazon at 158, Apple at 201. Apple looks like it's going to go below 200. Meta's and Microsoft, the only ones that are holding on right now. Apple and Nvidia look like they might get hit, and then Tesla obviously taking a hit here at that 193 level. Is there any argument with Apple? There was no issues with Interactive Brokers. Two things on that. Number one, they don't have the type of volumes Robinhood has. Number two, if you go to my Twitter, someone posted under my tweet that there was an issue with Interactive Brokers. They canceled their trades that they made on Interactive Brokers 2 days ago. So Interactive Brokers also was not perfect. Even though they didn't stop trading last night, It's just a hard thing to do 24 hours. Okay, what's the news on Apple? What's the news on that? Did they get a downgrade or something? Why are they down? Bank of America says 256 price target. They said Berkshire Hathaway selling doesn't matter. Oh, so the Google losing the antitrust case, that's bad because that means Google is not going to be able to pay Apple $20 billion a year to be the default search engine. It looks like that's why the stock's down 4%. Yeah, that's worse for Apple than it is for Google. I mean, Google's probably going to lose some revenue off not being the default search engine, but Apple got paid 100% margin on $20 billion a year just to make them the default engine. Huh. Interesting. Bank of America raised Palantir to $30. Yeah, we talked about that in the morning. I'm going to wait for the official report from Mariana, and then I'll share that on Twitter. But yeah, Bank of America did raise that to $30. Cat earnings was good. They missed on revenue by 1%, but overall was good. Tesla to fix 1.7 million vehicles recall in China. All right, that'll do it. Not the best news there. Now, granted, they have a recall on vehicles like almost every other month at this point. Does the market care that much about it? Do they actually care that much about the recall? Like they had a Cybertruck recall a couple months ago. China did report 12.5 thousand insurance registrations for the week of July 29th to August 4th, which is up 23% year over year. So that's good for China. Oh, but the recall is not going to be a physical recall. I'm looking at that right now. The recall is not going to be a physical recall. It's going to be a software update. Yeah, this is like how it was last time. It got community noted. This is like how it was last time. Last time it wasn't a physical recall either. It was an iPhone software update. That's not a recall, dude. Framing that as a recall is just disingenuous. That is just like, that's a software update. That's not a recall. Yeah, I don't think the stock's down on that. It seems like the stock's just down on big tech weakness here. 195, recovering a little bit. Where's Robinhood? Robinhood at 1655. All right, so Robinhood just went green. S&P at 519. Microsoft 400. IWM at 202. Rocket Lab 460. Meta at 480. NVIDIA at 102. NVIDIA being selfish. NVIDIA, it doesn't look like it's easily going to go down to that 95 level that people got yesterday, 92. NVIDIA still holding on. It should be called an update. Yeah, it literally should be called an update. I don't know. The Microsoft recall every time you open your laptop, dude. Yes, exactly. That's exactly what it is. SoFi struggling as well. I guess it's struggling because of IWM. 202 right here. SoFi at 648. IWM is probably what's going to be needed for SoFi to gain momentum, but SoFi still getting hit. Palantir trying to go back to 26. It's at 25.94 right now. Robin at 16.59. Palantir 25.97. Vimeo at earnings as well. They're up 12%. They had those yesterday. Intel at $20. CrowdStrike just went green, 223. Shopify 53, and then Verizon here at $40 right now. Okay, so kind of flattish market to down in certain stocks. Not the face-ripping rally yet. We'll see if that happens later. But so far, not too bad. Couple of headlines. So Goldman Sachs says buying the S&P 500 after a 5% drop is usually profitable. Since 1980, the S&P 500 index has generated a median return of 6% in the 3 months that followed a 5% decline from a recent high. So Goldman says you should probably buy the dip. Another argument right here on pullbacks. So pullbacks are common. 5% pullbacks occur 3 times a year, 10% one time a year, 15% every other year on average, 20% every 3 to 4 years. So we were due for a 20% pullback, not in the S&P, but in the NASDAQ. And I don't even think we hit 20% in the NASDAQ, but it's been a while since we had a real 20% drawdown. I think last time was like early 2023, late 2022. And so I guess we had that over the past couple of days. And then again, here's another chart kind of pointing to the level of pullbacks that we get right here. We went nearly 18 months without a 2% drop in the S&P, and now we've had 2% drops in 9 days and barely missed a third on Friday. So this isn't abnormal to see. If you see in this chart, if you go multiple days without a drop in the S&P, the choppiness you're going to get is going to be pretty dramatic. And so we went 356 days without a 2% drop in the S&P. That's almost a year. So now we're seeing some choppiness, which makes sense. Volatility will be there. Just a question of if that choppiness recovers. Rivian had earnings today? Really? Did they have earnings? I didn't think they had earnings. Rivian is up 0.79%. Let me see if they had earnings. I think you're right. Rivian. Yeah, Rivian. Okay, revenues of 1.17. No, I think Rivian's after the bell. I don't think it's out yet. Yeah, I think Rivian's after the bell. Today's what, Tuesday? Yeah, it's after the bell. Okay, so today we have Rivian, Airbnb, and SMCI after the bell, along with Reddit and Upstart and Wynn Hotels. So we have a lot after the bell to discuss. That's going to be important. And then tomorrow, obviously, we have a bunch of names as well. Fubo had earnings in the morning. Fubo's down 3.7%. Fubo market cap at $378 million. Again, Fubo, another small cap company. Fubo's going to need a lot more momentum from IWM to pick up as well, which might happen. But maybe it doesn't happen for a while. Fubo beat on revenue by 6%, beat on EPS by 71%. Still not profitable, but getting closer to profitability now, only losing 4 cents a share on Fubo. SMCI currently $600. They're down 1.44%. Oh, Dell, by the way, laying off 12,000 people, which just sucks. Not good to see more layoffs. Dell right there below $100, 95. Micron $88. Taiwan Semi $150. SMCI 602, AMD 131, Nvidia still holding on 102, Broadcom is flat, Qualcomm is flat, ASML is basically flat, and Taiwan Semi is up 2% on the day. Did Dell say why? No, just cost-cutting measures. Same thing with Intel. The sad thing about Intel is the Biden administration gave Intel $8 billion, and then they fired 30,000 people. Like, this is just insanity, dude. It's like, I mean, you can't give a company $8 billion to subsidize their chips manufacturing, and then they fire 30,000 people. Like, that's just crazy. So either a horrible move on the Biden administration or just like bad corporate governance by Intel. But we're seeing layoffs across the semiconductor board with Dell now laying off another 12,000 people, which is not the best either. Not all of that has come in yet. Admit grants are coming in later. Yeah, no, I get the grants aren't fully in yet, but I mean, firing 20,000 people after you get a grant is just wild, dude. I mean, like, I would just never trust that company again for them to do that. That is insane. The government's basically giving them away money. It's giving them taxpayer dollars for them to literally fire people. I mean, like, dude, there's no way you get around that headline. The government gives you $8 billion, you fire 20,000 employees. You could justify the cost cutting however you want to do it. Firing right after you get a massive stimulus from the government is pretty insane. But I guess we'll see. We'll see how it plays out. We got SoFi's Liz Young and her take on the macro. Let's see what she has to say, and then we'll go from there.
An hour to the opening bell on Wall Street. Joining us right now is Liz Young-Thomas, head of investment strategy at SoFi. Good morning to you.
Good morning.
Heck of a day yesterday.
Sure was.
We'll see whether today is a heck of a day too. What are you seeing? What are you thinking? And by the way, how's the service working? Because some other folks were actually really having some problems.
There were a lot of problems yesterday, but which happens on days when you have a lot of activity that nobody's prepared for. So what I would say,
we got to fix that at some point.
Yes. As far as I know, we didn't have any problems. But what I would say about yesterday is it's difficult in this kind of period because there's so much uncertainty. So you have to focus on what do you know. What we know is that in the short term, markets tend to overshoot, both on the up and the down. So what's looking like is happening today is that we overshot yesterday on the down. Usually that gets exacerbated by algos. Probably some of that happened. We had a lot of unwinding that was going on. But the other thing I would say is that something that I feel pretty certain about is you don't have events like yesterday or even that 3-day period that culminated into yesterday and just dust yourself off and pretend it never happened. Nothing's been resolved yet. We still have issues with the yen. I don't think that's over. We still have economic uncertainty. I don't think that's over. It's going to be a long time until we hear from the Fed in a scheduled way. If we hear from them before, I think that would be good. But I don't see there being any real reason for an emergency move from them right now.
How do you think about these 7 stocks that basically make up the majority of what you see in the S&P? And I'm thinking, by the way, of NVIDIA, and I'm thinking of Apple and Amazon and everybody else.
So coming into this, I mean, first of all, the other thing to remember is although days like yesterday can feel really scary, the headlines are very scary, right? Japan went from 0 to bear market in 3 days. The VIX at 65. All of that very terrifying. The swings that we saw in the Treasury market that shouldn't happen. But coming into this, it was from a really high level.
Yep.
And right now we're really only down, 8% in the S&P. That's nothing compared to a normal correction. So we still have room to go. And that high level was achieved by mostly those 7 stocks. So when you hit the skids and you hit volatility, a lot of the stuff that has most of the gains and is the most liquid is the easiest to sell. It's the first to go. So it feels the most pain on the downside, which is what we're seeing right now. But I think that's okay too, because we needed a little bit of a right sizing in what's driving the market.
Do you want to weigh in on this crypto debate we've been having on the set?
What's the debate?
Well, the debate was that it's completely not correlated to anything at this point. Or maybe it's correlated exactly to the NASDAQ.
I think in this environment, it has been correlated to the NASDAQ because it's trading like a risk asset.
Right.
The speculation has been, okay, if this Japanese yen thing continues, crypto will come in and save us because it will be uncorrelated to currency volatility. That's possible, but I think the rise that we saw early in 2024 has already been that piece. So, I mean, this yen thing is not new. This has been going on for a while.
But I think the question is every time there's something terrible happens in the world, in the markets, someone tries to assassinate the former president, what happens? Gold goes up and Bitcoin acts as if it's NVIDIA.
So, and this is my speculation, my opinion. I don't have necessarily proof of this. I would suspect that many of the investors who are heavy in crypto, there's an overlap with the investors who are heavy in tech, heavy in headline makers. And when everybody in that basket gets nervous, you have indiscriminate selling and you see all of the risk assets in that basket go down. I think that's what's happening right now. That's what happened yesterday and what's been building for the last week or so.
What are you smiling about?
I mean, gold's basically where it was 10, 15 years ago. And
that's
so it
true
goes up $30 as a flat.
Bitcoin go down.
Bitcoin was forced.
This is such a useless debate, dude. Like, you got Liz Young, get some more macro thought. This is such a stupid debate.
1 year, 5 year, 10 years, and 15 years, sooner or later, hodlers.
I know very well about hodlers, but because of the volatility that we see, that tells me that people don't stick around entirely. And if it is a store of value, you don't want to see that kind of volatility in an asset class that's expected to be a store of value.
But I don't know.
Okay, that was pointless. Like, Liz Young, I actually really appreciate her thoughts because she's a macroeconomist, even if I don't always agree with her. And they got into a debate about Bitcoin and gold. And it's just like, dude, come on, dude. Like, how is that relevant to anybody? How does anyone give a shit about that? Like, we know Bitcoin's a risk asset. Like, if the market falls, Bitcoin's going to fall. It's not that hard to understand that. But overall, look, the point she made in the first 2 minutes before getting into that stupid debate was that we still have more downside to go on the correction. And I don't think she's necessarily wrong for that statement. I don't think we drop again to 507s and the 500s, and then we hit the 490s on the S&P. I think we would. I think that could happen, but Japan would have to tank again. I think Japan normalizing at these levels and investors buying the dip on the Nikkei index, that's signaling to the market that it's okay to move forward from this and move on. I think the carry or the unwind of the yen carry trade has yet to be known. Some people are saying it's trillions of dollars. Other people are saying it's a small part of the economy. Like, if really it's that bad and we still see deterioration increasing in the yen and deterioration of the dollar against the yen, then people are going to have to sell assets like the Mag 7 to be able to pay back the interest on the yen as Japan raises their interest rates. And they haven't closed their interest rates. Now, Japan is going to do an emergency meeting today or tomorrow, I believe, at 3 p.m. So we're going to hear from the Bank of Japan pretty soon. But it's not like they decided to cut rates. And if they're not cutting rates, I don't know. I just don't know why Japan is up 10%. I really have no idea why the market continued to take it higher. So I don't know, dude. And like I even admitted last night on Twitter, I have no clue why Japan went up and no one really has a reason for it. And that makes me uneasy because if we don't know why Japan went up, then like, could it come down just as quick, right? Could it just be a dead cat bounce on Japan? And then when that comes down, the entire market really starts to unwind. She is right about this as well. We haven't really had a bad correction. Like S&P 507 sucked, but I mean, it lasted for 2 seconds and then we moved on from it. Robinhood right here is 1673. Robinhood's green for the day. Palantir, by the way, Palantir 2607, 8% up. So if we really had zero like pain, S&P now starting to move back up 1% at 521, then maybe there's more pain to come, or maybe it's a real bull market and you had a flash crash with the VIX go up the way it did, and we can finally move on from it. And I think there's a shot that that's the case, but we're going to need to see the market kind of prove that to us over the next couple of days. Japan, we meant to cut rates. My bad. We hit the wrong button, dude. I mean, Japan has been at 0% rates for so long. They finally have a little inflation now. They're like, oh my God, we need to raise rates. It's like, dude, there's no way you guys are struggling with the type of inflation the United States is struggling with, to the point where you have to literally raise rates. That messed up everything, dude. Japan raising rates really changed a lot of dynamics of this bull market. And now the broader market is going to have to kind of reconcile if it's a good or bad thing that they ultimately raise rates. I guess we will see. Kris said, call me. All right, let's get Chris's take on the macro. Kris is becoming like a daily contributor at this point. So let's call Kris and let's get his take. Imagine if they rise another 0.25%, dude. That would be crazy. That would be absolutely insane. If they rise another 25 basis points, that would not be good. S&P at 522. S&P showing some momentum. Kris, what's up? You hear me?
Yeah, I can hear you.
All right. Thanks for joining, man. Japan, why the hell is this index up 10%?
Okay, so a couple of things. From what I'm gathering, first of all, one of the things that you said real quick, let me address that. When the currency in Japan gets devalued so much, remember, they are a country that has to import everything into them. They're an island nation, right? So right now, about 3-4 years ago, the value of everything was 100 yen to $1. Now, with all the stuff that happened, it ended up being with Japan holding their interest rates low and the U.S. increasing their federal funds rate. Everyone started to do this carry trade, and basically the yen got devalued to the point where it was almost $1. 160 yen to $1, which
right.
meant that they lost 60% of their pricing power. So imagine every time you have to go transact with anything outside the country, you have to pay 60% more for that same item compared to 3 years ago. So, a lot of this was actually, believe it or not, political. Now, the part that it's going to be really weird to explain, but Japan actually can't raise their interest rates very much because they have a lot of debt. Like, if you go to Japan in terms of like relative to their GDP,
it's like 240% or something. It's crazy.
Yeah, it's to the point where if they were to increase their interest rates by another like quarter basis point, like that would be the entire Japanese what is that thing called? Tax revenue would go towards interest payments on the debt. That's how bad the situation would get. So a lot of this was just political posturing that I think ended up making this Japanese yen trade unwind a little bit. The other thing is a lot of people are looking at the outsiders, like hedge funds in the US and stuff. But no, there's a lot of people within Japan and a lot of banks within Japan that were also using the carry trade where they were borrowing money cheap and buying equities cheaply. That's why you saw a lot of companies get sold off in Japan also. So
why did the index reverse last night 10%? How do you explain that?
Well, because at this point, the carnage is done. In my opinion, the Japanese carry trade is basically unwound. And there's probably some level of manipulation in the background by the central banks in order to kind of stabilize things. So you could see like G7 countries doing selling yen, and the Japanese at the same time buying US dollars, right? So what you're essentially doing is weakening your own currency to basically stabilize things. And when you stabilize things, people just have a lot more bullishness. So I think,
but if they weaken their own currency, isn't that going against the rate cut or the rate increase?
Well, the thing is, remember, you don't want what just happened right before then, which was a huge drawdown in their stock market, because a lot of this stuff, for what I just said, is very, believe it or not, it is actually, in my opinion, it's kind of political at this point, where you're kind of like trying to project out to the Japanese public that, you know, that you're actually like doing something about their woes. I don't think that they understood how bad the market would get. So now they're kind of like on the back foot of everything. And I think smart money recognizes this, and actually smart money is buying into the indexes, especially because if you look at a lot of Japanese companies, they're actually trading at a pretty good value, you know, especially like the five big, what are they called? The trading houses that Buffett bought. Their PEs are in the single digits, maybe like the low double digits. And they're super important companies. They're doing extremely well. Japan's economy is actually growing. So I think right now the Japanese carry trade, it was a problem, but I think most of it has already been unwound. And if you look at the data, you know, a lot of people think, oh, the Japanese carry trade got blown up within the last 3 days. No, the Japanese yen trade has been going down for the last month. But the thing is, it was a lot more gradual and unnoticeable. Now, all of a sudden, we noticed it because we also had the jobs report come out at the same time,
Right.
which accelerated the 10-year, people buying the 10-year, which made the whole situation worse. So it's not that there wasn't unwinding. So if you go to your screen and you look at JPY to US dollar, right? It was almost $160 in the beginning of July, and it started to make its way down. So it wasn't like, oh my God, this just happened all of a sudden. Like, no, this was a gradual come down. So it's been about a month for the carry trade people to get out. And I think most of the people that were going to get out have already gotten out. Now, whoever's remaining in the Japanese carry trade is basically, you know, like taking a risk. But for the most part, I don't think that there's much room left for the unwinding. I think the unwinding is already done.
Yeah, so it's interesting. Over the past month, USD over JPY is down 10%, which is bad. We want to see that go back up. Do you think it goes back to 160 like it was in July levels?
No, it wouldn't. That would be really bad, because then the Japanese central bank would have to like be a little bit of a butthole about it again, right? And basically be like, oh no, they'll jawbone the market and say that rate hikes are still on the table. You know, even though inside everyone knows that there's no such thing, because they would literally blow up their own economy if they did that. But jawboning enough is a big enough risk not to get into like the short Japan trade. So I think
so you really think that if the trade is unwinded, that we're going back to rallying, is your point?
I wouldn't say that we're going rallying. I just think that the VIX is probably going to come down. So the volatility is going to get absolutely demolished right now.
Right.
Look at one thing that I bought this morning that's up 7%. Look at SVIX, SVXY.
SVXY. That's a short VIX ETF? Yeah.
Yep.
Yeah.
Look at that. So the volatility, the fear in the market is, in my opinion, done. There isn't as much fear left. So we'll see.
But how do you? But here's my question: how do you say that so confidently, given all the uncertainties we have, rate cuts, unemployment? Like you feel like the flash crash we got yesterday, given the VIX spike to 2020 levels, was enough to create peak fear? Is your point?
Yep. You know, fear is one of those things that's contagious, but courage is also contagious. So right now, with people stepping into the market and people seeing some green, other people will follow along with it. So I think right now people are, especially like smart money, is putting some courage up in there and just saying, you know what? The Federal Reserve already gave us a preview of cuts coming in September. So, you know, about 2 weeks ago, we didn't even have a guarantee that there would be rate cuts in September, right? I mean, it was still like, oh my God, maybe not. Is it going to be 50? Is it going to be 25? Who knows? But now for certain, we know that there's going to be cuts in September. And at the same time, if you look at ISM numbers that came out yesterday, they were actually good.
Yeah.
Which means that, hey, we might be contracting a little bit on manufacturing, but if you look at services, they're not contracting. So what does that mean? That means that there's a possibility that Tom Lee was absolutely correct in saying that the Hurricane Beryl situation might have impacted hiring a little bit in that specific region, and that's what might have caused some of the numbers to look a little bit inflated. And then all these bandwagoners jumped in, oh, the Psalm rule, and they started to sell off the market. So as far as I can tell, structurally, there isn't anything wrong. I have enough balls to be in this market during this time, and I like I said, I'm fully loaded. I was long YCL, which gave me a nice hedge against all the drawdowns. Now that I had some liquidity, I started buying into the market.
Are you doubling down on cruise lines? What exactly are you trying to get exposure to now?
Yep, cruise lines, baby. We going cruise lines, man. Cruise lines, especially look at CCL today. Okay, there is a huge correlation between CCL and the 10-year, primarily because CCL took on a lot of debt during COVID. The good thing is when interest rates come down, that's super beneficial for cruise lines, because that means that their earnings will go less towards interest repayment and more towards shareholder returns, whether that be in the form of debt repayment, which boosts equity valuations, right? Or reinvestment in the business, which grows future revenue. So the point is, right now, you look at the cruise lines, they're doing well. Royal Caribbean's up almost 7-8% today. You know?
Yeah.
So the fear that, oh my God, we're in a recession, that's slowly dissipating. So anyone who's got the courage and in this market right now, they're going to do well. Anyone who's going to stay on the sidelines, oh, I think this is what is it called?
Dead cat bounce.
A dead cat bounce. Bro, we had the dead cat bounce 2 weeks ago in the thing. This carry trade got, literally people caught the tail end of it, and they think that, oh my God, like where's the other shoe that's going to drop? As far as I can tell, there's no other shoes that are out there. I still have cash on the sideline just in case, backup, to basically, what is that thing called? To buy another dip if I have to, or to buy some protection if I really needed to last minute. But for now, I think we're good.
Okay, Chris, I got to ask you this question because everyone's forcing me to ask you this question.
I'm not buying Palantir.
Not buying Palantir. What are your thoughts on the earnings? What do you think? They good earnings or no?
I think they were good earnings, but that question that Dan Ives asked and Karp was cagey about, I am leery of that, where basically it's like, oh, what's your conversion? Blah, 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 blah. I'm not a big fan of that. So we'll see what happens.
But overall, you thought the growth 27%. I mean, they're back to growth mode. They're not, sub 20% anymore.
Yeah, no. You got to give them their flowers, dude. Palantir has been really doing their work, getting customers in the door. Like you saw their customer count jump, which is awesome to see. And at the same time, re-accelerating growth is always a good thing for any business, right?
Yeah.
The question is, how durable is it? And also, don't forget, the valuation is still really, really high. So it's all about maintaining this movement. So we'll see what happens.
All right. Thank you, Chris. Appreciate it. We'll talk to you later.
Later.
All right, folks. I tend to agree with Chris on some of this macro stuff. I don't know if he's fully correct on the carry trade being completely unwinded. I think he's probably right, given the index we've seen, given the move we've seen in the Nikkei index. But if it's not fully fleshed out of the system, maybe there's some more pain. It's just, again, I feel like the markets would price that in. They would know that, and they would not allow the S&P to go from 507 to 523. We're up 1.12% today, if they knew there was more pain to come. So, I mean, look, I'll be a buyer today on dips. I don't think I'll buy more Robinhood today. Like, I think some of these prices are stupid. Palantir probably should be closer to $30 right now, just given the quarter they had. They're stuck at 26.30. They're starting to rebound a little bit. They were at 25.57. Google, stupid reason they're down with the antitrust thing. I mean, it's a real reason, but I think at the end of the day, that's not stopping Google's trajectory. So a lot of big tech has been repriced. A lot of the broader market has been re-rated. NVIDIA is struggling to maintain 100. And now it's just going to be a question of when the market fully feels the Japanese issue is over. And I do agree with Chris that I think smart money is coming in and they're buying. And while other people are afraid until they get full confirmation, then some of these equity prices are definitely not going to be as attractive as they were before. And so we'll see. We'll see what happens there. What was the overall volume on the drop yesterday like? Well, volumes were elevated for most stocks. I don't know the exact volume on S&P right now, 14 million volume. I don't know the exact volume of yesterday, but I looked at some individual stocks and volumes were like 2-3x their daily average because obviously there was a lot of selling. So we did see some pretty high volume yesterday. The thing about yesterday is like I think a lot of people got close to getting a margin call. And when you get close to getting a margin call or your brokerage at least tells you, hey, like you need to free up some cash because if not, like we're going to have to margin call you, then you just start selling random stuff. And so maybe you had, 100 shares of Palantir you don't care about, you sell that. Maybe you had 5, 10, 15 shares of Google that you don't really care about, you sell that, right? And all that like random selling across the board. Maybe you have 1,000 shares of Robinhood that, you don't really care about Robinhood, you just had in the portfolio, boom, it's gone. All of that contributes to more downside pressure. But today I don't think that's necessarily happening, obviously because the S&P is not down 10%, and maybe that also helps sustain some of these stocks even if their volumes are not as high. What else do we have? So we didn't talk about that Kamala pick for VP. I still don't know anything about Tim Walz. Dude, I thought she was going to pick Mark Kelly. I heard a rumor, I was reading some article that Obama wanted Mark Kelly, the guy from Arizona who flipped Arizona blue, to run for president, not Kamala. But eventually he realized like he wasn't going to be able to get Mark Kelly, and so he endorsed Kamala. But then I thought Kelly might be the VP. Apparently not. It is Tim Walz. Dude, I've never even heard the name Tim Walz in my life. Oh, by the way, Kathy Wood, let's go through her buys yesterday. She bought a ton of shit yesterday. She bought 50,000 shares of Palantir. She bought 681,000 shares of Robinhood. So she bought the dip heavy. She bought some Tesla. She bought Roku. She bought Coinbase, 65,000 shares. She bought 140,000 shares of Amazon. So Amazon right now, Amazon is 160. Amazon 160. So she definitely bought the dip on Amazon. Bought 4,000 shares of Meta. She sold 335,000 shares of SoFi and a ton of Square. So kind of weird, right? Like she gets rid of SoFi, buys more Robinhood and Coinbase. So she bought the crypto plays and she got rid of Square and SoFi, which are Square is kind of a crypto play, but SoFi, the other brokerage app and bank that she had. So she made some moves and she definitely bought a decent amount of stuff. Now she sold Palantir and Robinhood last week. So people were like, it makes no sense to buy it again, but both of them dipped. So if she bought Palantir at 22, if she bought Robinhood at 17 after selling it at 22, then not horrible. I mean, it makes sense to engage in that dip. Chat says, as much as I don't see eye to eye with on Palantir with Kris, I appreciate you can have a conversation. Yeah. I mean, I know a lot of people give Kris shit about Palantir. I think for Kris, it's not about the company itself, dude. It's more about the fact that he sold early and now it's just kind of like, it's one of those things where everyone has that opinion. Like it's me with Neo. Like I sold Neo at $3 and then I never got back into it. Now, thankfully, Neo is not Palantir. So Neo came right back to $3 after it went to 60. But when you sell a stock early, it's kind of hard to find the strength to come back in and really get excited about it. Now, granted, I think Palantir has done more than enough to warrant, even if you sold at $8, $9 to come back in at 24, 25. But Kris is also a sniper. He sees lots of other opportunities in the market. The risk reward on Palantir is not that exciting for him, especially because if you have to buy it at these levels, you still have to wait for $50 for a double, which is going to take some time, right? It's not going to happen that quickly. Whereas on the cruise lines, he thinks he can get a double way quicker. So I think with Kris, it's more so just a question of position sizing. And also he likes to be the heel. He likes to be the villain. I mean, he told me this. He enjoys the attention of being the villain when it comes to all this stuff. I do think he hates the valuation a lot. I just think that's a horrible reason to stay out of names. I mean, like if you could have paid the valuation on Amazon for years and missed the entire thing. Same thing with Tesla, right? I was talking with an early Tesla investor the other day. Tesla 20x'd in 2019. Right here, 2019, it was at $11 in January or June 2019. By 2020, it was at $290, bro, or 2021, and by 2020, it was closer to $200. I asked the Tesla investor who had a lot of money. He made a lot of money off the early days of Tesla. I was like, so what happened? Why did it go up 20x? Like why did it do that? Like what, because I was in college at the time. I was paying attention, but wasn't really paying it. Like you were there, you had real money in it. Bitcoin, 56,000. Why did this thing go up 20x? And he was like, I have no fucking clue. It was like, dude, Elon just talked about FSD and that's it. Because I looked at the numbers, I was like, okay, so the growth was increasing, but it's not like, to go up 2,000%. I mean, like you have to have a hell of a narrative around that name. And then look at what happened since then. Although Tesla has come down a couple times by 50%, still $700 billion market cap. And it was at, a $40 billion market cap all those years ago. After it exploded to the trillions, it has come down from there, but has never gone back down to the, sub $100 billion market cap. And that's because there's a narrative around the name. They have the growth to support it. The growth has stalled, but FSD believes, people believe that will accelerate the growth. And then you miss the run. It's going to be very hard to get Tesla sub 100 billion again. And maybe that is going to be the story with Palantir trading at sub 100 billion. Palantir market cap right now, 58.7 billion. Maybe once this thing really takes off, it's going to be hard to get it back at those levels again. I mean, think about how hard it was to get this thing to go to $21 yesterday. It took a freaking VIX going up 200% just to see Palantir in the low 20s again. And now I think it's going to be harder for it to get there unless the entire macro gets hit again. S&P is up 1% as well, 524. Carnival Cruise up at $15. Robinhood 1693, that's up 3%. QQQ 440, that's up 1.17% as well. S&P and Nasdaq both up 1%. Not bad. No, not bad. What's your take on Hood at 17? It's a buy, dude. It's a buy. Like it's dude, Robinhood is a buy. This is I mean, look, this is stupid. Let's just do the math. Market cap 14.8 billion, 4 billion in cash. Actually, it's like 4.5, but let's just assume 4 billion. 10 billion enterprise value growing 40% year over year. They're going to put up $640 million of revenue in one day tomorrow. This is a joke. Like, it makes no sense, dude. It was worse of a joke when it was below 15. It's stupid. This is stupid. And I think on earnings, they're going to crush and things are going to change. Now, I could be wrong and we'll see what happens after earnings tomorrow. But I think the risk reward, like buying a Robinhood, going balls deep on Robinhood at 22, 23, I would say your risk reward is limited because my upside is $25, maybe $30 end of year. Now with this whole pseudo recession, I don't even know if we get to 25. We got to see if things recover. Buying it at 17, I feel like the risk reward is amazing. Buying it at 16 yesterday, the risk reward is amazing because like what? It's going to $13? Like no. The worst the pain goes to is like fucking $14.98 again. And then you just average down because again, that's like I love buying a stock where if it goes down another 20%, I am so happy to DCA because I know my average is going to be exceptional. Whereas if I buy a stock, when it's at like Robinhood at $24 and then I have to DCA, I mean, that's not the best because at the end of the day, you bought kind of at the higher range of the 52-week high. So I think if it goes down another 10% from here, I'm going to buy that dip again. Like that's just stupid. It doesn't deserve to be at these levels. So, I think that makes sense. And for the NVIDIA bulls that were super bullish on NVIDIA when they saw it at 92, NVIDIA was the cheapest it ever was at 92 yesterday in the past 18 months. And obviously I'm not as deep into NVIDIA as I am on other names, but those that were, they bought heavy because they realized it's really difficult to get this type of broader discount. Let's hear Ashwath's take on Berkshire selling and his perspective on this. Professor at NYU, here's his take on why Berkshire ultimately had to trim some of their Apple position.
Of valuation, Ashwath Damodaran and NYU Stern School of Business, a professor of finance. Good to see you today. What do you make of what's happening, especially related to mega caps and the growth trade?
I think it's in a sense a correction that we've been waiting for all year because people have been warning us about this. But I think that, some perspective is needed here. I mean, you look at these stocks, clearly the last week has been horrific. Look at them again, a month ago, again, horrific. But you go back to the start of the year. I mean, come easy, go easy. You've added trillions in market cap. You're losing $1 trillion in market cap. So from that perspective, I think some of this cleaning up is long overdue. So I'm not surprised. I'm just surprised it happened so quickly and essentially in such a compressed time frame.
Yeah, the interesting thing of speaking with you, of course, is you're not only a trusted observer, you're a shareholder in many of these companies. So take me inside your own head today on how you're looking at this pullback, whether it's an opportunity you see or you're simply waiting because you think more is to come.
No, all year I've been saying I would not buy these companies at prevailing market prices starting in March, other than Tesla, which I added in earlier this year. At the same time, though, I would not be in a hurry to sell them because I think they remain. I mean, in spite of all of the bad news you've heard about them in the earnings reports, they continue to make money. It's relative to expectations, they might have underdelivered. But look at the revenue and earnings numbers. They've come in surprisingly close to expectations outside, again, of Tesla, which had that underperformance in earnings. I just think the mood has shifted. What would have been good news 2 months ago is now bad news. And that's the nature of markets. No, and I'm letting it ride in my portfolio, and there's pain in my portfolio, but again, with perspective, I'm okay with that pain.
When you heard about the Berkshire move in Apple, your reaction was what?
I think that Berkshire is just overinvested in Apple. Any company that ends up with 30% of its portfolio in one company is asking for trouble. That's always been a problem. I think that I'm glad they got out from under the problem before it was, in a sense, too late. So I think they were dealing with a portfolio concentration problem. And I don't think of it as a signal that they think Apple is overvalued. I just think it's a signal that having 30% of your portfolio in one company is never a good idea.
I don't know if it's just about that, dude. I think there's more to that than just thinking you're overweight Apple. I mean, dude, you've been overweight Apple. You've been obese Apple for the past 10 years. I don't know why today you wake up and you say you're too overweight. So I don't know. I think it's a little bit more than just being too concentrated, but at the end of the day, I don't think it's the worst thing for Apple. That antitrust lawsuit yesterday, that was actually much worse for Apple. Obese Tomato, thank you for the $5 super chat. If we see a major market downturn, do you think Palantir will make any acquisitions with their stockpile of cash? Okay, so thank you for mentioning that. Palantir bought back 1.2 million shares last quarter, guys, at an average price of $22.50. So that's telling the market we think we are deeply undervalued at $22.50. So they spent about $27 million buying back those shares. I don't think they're going to make any acquisitions. I think the company has gotten to the point where they innovate so deeply in terms of their culture that they're not going to do acquisitions. But I do think if we have a market downturn and Palantir goes below 20, like a bad downturn, they're going to buy back more stock. They should have had $4.1 billion in cash. They only had $4 billion in cash. That's because they obviously spent some of that money with the buyback. So I do think that if we get a really bad downturn, Palantir 26.50 up 10%, they'll just buy back more stock, but probably not any acquisitions because they just innovate internally. Okay, so Jumia, this stock is down 50%. Jumia is down 50%. I know this name. This is a name that has been getting some momentum on Twitter. I don't know what the hell they do, but why are they down 50%? JMIA missed on EPS by 91%, missed on revenue by 8%. This stock year to date is still up 64% after being down 50% today. Think about that. The stock was up so much. In the beginning of the year, the stock was $3. 2 weeks ago, the stock was $15. So it basically 5x'd. And now it's down 50%, but still up 60% for the year. I don't know what they do. The Amazon of Africa? Really? Huh. Revenues on Jumia was 46 million, and then EPS, they lost 69 cents a share. Interesting. So, all right. Well, I guess that's what they do. They're down 50%. Is that a buying opportunity? No clue. Market cap's at 559 million. I'll look deeper into this. I have a couple friends who actually really like this stock. That's why it was on my radar. Otherwise, I wouldn't have known about it. But I'll ask them if they think down 50% makes any sense. VIX is going down. That short VIX thing that Kris bought, SVXY, that one is up 9%. So the VIX itself currently, yeah, look at VIX. VIX is I mean, it's not where yesterday was at 65. Today it's at 28. Wow. Volatility index is down 27%, bro. Holy crap. If that is a sign of what happened in 2020, the S&P bottomed at 507, dude. Let me show you guys this. So VIX on the 5-year, right? Last time we saw 65, which is what we saw yesterday, was March 2020. Okay, March of 2020. Now, let me show you the S&P. S&P, look at that, March of 2020, 228. S&P bottomed the same day the VIX spiked. And yesterday, we had the VIX at 55. I think at one point it was 65, but basically the same levels it was at 4 years ago. And yesterday so this is the VIX right here. Yesterday, here we go, 55. And then yesterday, the S&P, 507. So It says 511 here, but it was 507 in the pre-markets. So if that relationship between the VIX and the S&P is correct, and the VIX spiked while the S&P bottoms, and now the VIX is down dramatically from those levels, it created some of the most amazing buying opportunities. I mean, look at the S&P 500 after March 20th. If you bought during that time and you bought heavy, you did very well. Look at this. Bottomed on March 2020, and then that was 228. By December of that year, S&P was already at 360. 370. So, I mean, you made a really mean bottom right there and just kept going higher. You had a little bit of dips in between, but nothing as dramatic. And so if that repeats itself again, 507 will be the bottom, and we're going to just keep going higher, hopefully. But I guess we'll see. Yeah, but back in 2020, the Fed had a Sunday evening emergency meeting. That's true. But as you can see, the volatility index is down without that emergency meeting today. Palantir 2641, Robin at 6090. So, I mean, you got the VIX to go down without the Fed stepping in and saying they're going to cut rates in some emergency August cut, which I don't think they're going to do, which is kind of just going down naturally on its own, which means maybe it was a bit of a flash crash. I don't want to say that it is, though, because, like, next thing you know, Japan's back down. Things are unwinding again. Like, and this is just like a day or two of relief, but shit still hits the fan. So I don't know. We'll see. But right now, given that the market's performing, it does feel like yesterday potentially could have bottomed if the VIX is correct. S&P right here at 522. Let's get Josh Brown's take on Apple as well and what he thought from Berkshire selling it.
How you're thinking about Apple, and so much about how you think that Berkshire makes some of its investing decisions, or you've certainly made it part of your career to try and figure it out. Just what's your take?
So I was surprised because you tend not to see him do things like cut a position in half. He either gets all the way out or he gradually reduces. So he has done things like this before. But again, this is a little bit more on the rare side, especially when it's his largest position. Keep in mind, Apple was half of Berkshire Hathaway's stock portfolio and worth about a quarter of its market cap. So this isn't just like, oh, I bought a little bit of Goldman Sachs and then I sold it 2 quarters later. This is something a little bit bigger. But I think one of the things that you're hearing in the media that is not true is that the percentage of cash is some incredible amount relative to what it has been historically. On a dollar basis, it's higher than ever. But Berkshire's market cap on a dollar basis is also higher than ever. So this doesn't strike me as Warren trying to signal something to the market or anything like that. And just to put that into perspective, Berkshire's market cap to cash and cash equivalents right now, based on what we just learned in this filing, Scott, it's about 31%. It's the highest level in 4 years, but in the second quarter of 2020, it was higher than that. So right now, it's a little bit above the longer-term average of 25%. So it's elevated, but this is not Warren Buffett climbing into a nuclear fallout shelter. That's just not what it is. You need a denominator, and the denominator is the overall size of Berkshire itself, which has grown in concert with the cash pile for the most part.
I hear you on that, and I don't necessarily think that we would need Buffett to put up a smoke signal or something like that to suggest that there's doom on the horizon, and this is the signal for that. But I think in totality, you can say, well, they've been sitting on a mountain of cash for a while, right? Unable to find anything really constructive to do with it. And maybe part of that is because valuations they thought were stretched in many, many different places. And now you have this move taking some off of the top and a lot of it of a primary position, the biggest position that they have. And you take that in total and you say, okay, he's been sitting on a mountain, unable to figure out what to do with it. Now maybe he's uneasy about the environment.
So we will go back to this, guys. We got Michael Saylor on CNBC right now. Let's see what he has to say right now. So let me pull him up and we'll go back to this.
MicroStrategy are also attempting comebacks here. Joining us now to discuss is Michael Saylor, co-founder and chairman of MicroStrategy. Michael, it's great to speak with you. Thanks for being back.
Yeah, thanks for having me.
So we did see this mini crash in Bitcoin yesterday. It's traded as a risk-on asset, considered a proxy for liquidity in the markets. At least one technician I've spoken to in the last 24 hours said we're really range-bound here, up to 61,000. What's the next catalyst? What breaks it out?
You know, I think the events of Bitcoin 2024 in Nashville a few weeks ago were just very catalytic and marked an inflection point for Bitcoin. You had presidential candidates, you had governors, you had senators, you had House members, you had CEOs, you had billionaire investors in the audience. Senator Lummis presented a strategic Bitcoin reserve bill, and that's our Louisiana Purchase moment. What happened there was the Overton window shift. Now it's possible to discuss nation states holding Bitcoin on the balance sheet. And if nation states are going to buy it, then it's reasonable for institutions, corporations, and individuals to buy it as well. So that was tremendous.
And former President Trump got behind the idea too. So it's a good idea. You think a strategic reserve for Bitcoin is a good idea?
Well, Thomas Jefferson purchased the Louisiana Territory for $15 million in 1803 and nearly double the size of the United States. Seward paid $7 million for Alaska. It's got $1 trillion of oil underneath it. Everybody's going to be doing business in cyberspace. Bitcoin is scarce, desirable digital property. It's a great idea to trade a little bit of currency or paper for some place that billions of people are going to be in 100 years. So yeah, I think it's a great idea.
Interesting. I mean, I feel like there's always been this ethos around Bitcoin and cryptocurrencies in general that they're decentralized, digital gold. You've called it digital real estate in the past, and it's sort of a hedge against inflation. It's a hedge against governments spending too much money, for example. So the idea that governments would be holding it seems like it goes against that.
You know, it's desirable property. And if you're capitalizing a country based upon scarce desirable property, buying Manhattan, buying the United States, buying Alaska, anywhere you can do business, it's the basis of a great empire. So no, I think it's a good idea for a nation, but it's an equally good idea for a corporation, an individual, a family, or the like.
Okay, so Bitcoin and cryptocurrency is clearly on the ballot. What's at stake then in November?
You know, and what you have is two constituencies. You've got traditional finance, and traditional finance operates 19% of the time. It costs $40 million to take a company public. You know, there's no credit, there's no liquidity on the weekend. Bitcoin represents a different thing. It represents the 21st century. So I think the millennials are looking at the world today, and they think, electricity, water, elevators, the internet, they operate 100% of the time. Bitcoin operates 100% of the time. Why are we stuck with 20th century banks, money markets, and capital markets that shut us down at 4 p.m. on Friday, don't open up until 9:30 on Monday? You know, if we did that to your food, your water, or your air, it would be considered cruel and unusual punishment.
You're buying more here. You've raised more debt to do that in recent months, filed last week to sell more shares. How does this strategy continue to play out?
MicroStrategy is a Bitcoin development company. We're an operating firm, and that means we have some advantages over a trust company. We've got permanent capital. We can generate cash flows. We've got operating flexibility. Our shareholders want more Bitcoin per share. They think if we get more Bitcoin per share, that's creating shareholder value. That means we're pursuing BTC yield. Whenever we can do a capital markets transaction that's accretive and generates more Bitcoin per share, we'll do it. We have the ability to sell equity into the market at a premium to net asset value. We have the ability to issue convertible bonds. We have the ability to generate operating cash flow. We're just going to keep generating more Bitcoin per share any way we possibly can by selling the volatility of the asset class and then sweeping it into the underlying asset.
Founded as an enterprise software company, Business Intelligence, MicroStrategy. That business has enabled the build out of this Bitcoin book. Can the core business continue to generate enough cash flow to support the business for Bitcoin, or support Bitcoin and the business there, given the fact that revenue has been stagnating?
The business is stable and it is a cash cow, and we have a lot more room to issue debt based upon that cash flow. But we've also got options like convertible bonds and equity and the like, and some other strategic alternatives that will allow us to continue to raise capital to buy Bitcoin.
Michael Saylor.
We're confident. Thank you.
Michael Saylor, thank you.
Okay. You had Saylor doing Saylor things. Robin at 1705, Palantir 2680, both of them rebounding right here. Yeah, dude. I mean, I didn't think at 1630 this morning that made any sense, but Robin right here at 1706, Palantir as well. I think we should get to 27 today, dude. Like, I mean, 27 is not insane given that quarter we got. So let's see if it can get there, but still up 11% of the day. So that's not bad. In terms of what Saylor said, nothing too different than what he's been saying. They did potentially file to raise more capital to buy Bitcoin, about $2 billion worth of it. So we'll see if they buy more. But I think everyone at Bitcoin is getting annoyed because we're waiting for like the explosion. SoFi just went green as well, 657. We're waiting for that $100,000 God candle. And given the macro, it does not look like it's easy to be able to find that yet for Bitcoin. So, I don't know, 49,000 to 56,000 was awesome, but like that breakout, it's different from 2021. 2021, there was just the breakout and then it collapsed. 2024 has been like this gradual move upwards. And then you hit this resistance level every time at 70. And then it just takes a beating from there. And it's like, it's just hard for this thing to recover a bit. So guys, I'm going to try to stream Shyam at 11. I don't know if I have the link that he's going to be streaming on. So that's the only problem. It's on Bloomberg. It's not, if it was on CNBC, it'd be easier, but YouTube TV doesn't have Bloomberg. And the Bloomberg live stream on YouTube, I don't know if they're going to be showing it. So we'll see at 11 if it pops up. If not, then we're going to have to watch it on the market close. But I don't know if I have the exact stream on it. I don't know why Bloomberg TV is not included with YouTube TV. It's like they just don't even have a channel for it, which is weird. I need to like get the package where I like have Bloomberg TV associated with it. Oh, hold on. I have maybe their website itself. Oh, yeah, I have it. Never mind. Oh, this was easy to find. This was super easy. My bad. I have it. So 11 a.m. He's on at 11:10. Okay. Cool. So I have it. It's actually just on their website right here. Okay, cool. So cool, we're good. So at 11, we'll share Shyam and we'll see what he has to say as well. Palantir S&P inclusion, we won't know that until December, but we will see in December when the index rebalances if Palantir gets in. Trying to see some other stuff for the quarter. These were the top line headlines for the quarter. The figure video already came out, Benny. We talked about that in the morning. The figure video was out at 8 a.m. These were the top line metrics: 678 million revenue beat, 27% year-over-year growth, 55% U.S. commercial, 24% U.S. government, 83% U.S. commercial customer count. I'll go deeper into this in my video that I make today, but I think the most impressive thing here was the government beat, which is one of the reasons Palantir actually beat on their revenues. So let me pull this up right here. If you guys can see right here, the government beat. I mean, this was pretty incredible. Look at that. 302 million to 371 year over year. And that's up to, this number was 6%, dude. This number was bad. US government growth at 24%. And it's reaccelerated dramatically. Karp said on the call that a lot of people thought that the government business was too lumpy for them to accelerate, but they're showing that with contracts like Project Maven, obviously they are getting such big momentum because their products are actually in use that they're able to justify the government spending money on them. And so that's why we're seeing more momentum with that government business. Next, S&P rebounds is September, not December. Okay, so then September, we will know if Palantir is into the rebounds. Yeah, you're right. I think one's at the end of December and then one's in September, if I'm not wrong. So I guess we'll find out in like a month. It's crazy, dude. It's going to be September in a month. That's crazy, isn't it? That is crazy, bro. Like, it's really August 6th. It's been a long year, but it feels like it's gone quick as well. It's gone pretty quick. And then once you're done with September, you're basically at the end of the year. October, November, December, boom, you're done. And then we're in 2025, which is just like wild. 2025. Which dude, it's great. It's like time is moving quick, dude. It was just 2022 like 3 years ago. Now it's 2025. Amit, was that you in the blue hat in the background of Aiden Ross Trump interview? So I was not at the Trump interview. However, for those that don't know, Trump did a live stream with Aiden Ross, who's a streamer for like Gen Z guys mainly. 420,000 people, dude, were watching. He gifted him a Cybertruck as well, which is wild, dude. And so it was one of those things where Trump definitely got a lot of more mainstream distribution from that demographic. But it was one of the largest streams ever on the internet, and there was a lot of people there. Here's the video of the Cybertruck. Oh, dude, and he's definitely doing the marketing, dude. 430,000 people, 20,000 people. That's a lot of people. Now, a lot of them, as Wong said in the chat, they can't vote. They're probably younger than 18, but continuing to get distribution in other areas. The only reason I'm bringing this up is because we're not seeing Kamala kind of reach out in these angles, being on these like influencer level podcasts. Maybe she's going to start to do it a lot more, but Trump's obviously trying to get to the youth and, you know, get his image correct in front of those people to potentially get them to think more favorably of him. But that did happen yesterday. Okay, I want to find a little bit more about Tim Walz. Who the heck is this Tim Walz guy that Kamala picked? I think I have a video on this. I just want to get a quick understanding of who the heck is this guy. Tim Walz is who Kamala picked. Dude, does anyone know this guy at all? Like, I had no clue. Absolutely no clue. Let's see if we can bring up something. We'll see what we have there. It is a little bit of a boring ticket. Yeah, it's like I mean, I felt like there was. I felt like Pete Buttigieg would have been so much more exciting, dude. Or Mark Kelly. But instead, we got Tim Walz. Again, no opinion on the guy. I don't know anything about this dude. All I know is that he was the pick today, and Kamala's excited about that. Okay, let me pull that up. But in the meantime, let's listen to Oppenheimer on why you probably should buy this dip, and then I'll try to get some VP coverage.
And totally, who remains? Peter, you know, globally speaking, as you do, what can you tell us at this point in terms of the impact that we've seen from this unwind of the yen carry trade? How far it has to go, and what you think about the impacts it's had on markets over here?
Well, I think that the setup of this correction is important for context. Bear in mind, it came after one of the strongest first halves, at least for the US equity market, that we've seen over many decades. And really, since the trough of the markets that we saw last October, global equities had already risen by about a third and the NASDAQ by about a half. So we'd seen this tremendous rise. Now, a lot of complacency really built into the markets. Really as a function of optimism about AI. So I think in the sense this correction was healthy and somewhat inevitable after such a long period without a pullback, particularly as you started to get some signs that the US economy was slowing. We'd already seen good evidence that that was happening in Europe and China. My feeling is that this correction, although it's stabilizing, is not yet over. We're still going to see, I think, some choppy environments in the short term as investors really start to calibrate and get more confident again about the direction of interest rates in the economy. But at the same time, I think we're not in a bear market and there are going to be some good opportunities.
All right, so a little bit of everything here. You know, Mike mentioned earlier.
Okay, here's some more coverage on Walz.
In Washington, D.C., and for that, we will get to Megan Casella. Megan.
Hey, good morning, David. We have just learned NBC News has one source reporting that Vice President Kamala Harris has chosen Minnesota Governor Tim Walz to be her running mate. He will be the VP's VP. This caps off just about a 16-day sprint to both secure the nomination for Harris and to choose her a running mate. With this pick, she's really going with someone who campaigned as a moderate and comes off like a moderate, but has governed like a progressive in Minnesota. He passed $1 billion for affordable housing. He passed a tax credit for low-income parents. He's really been in supporting these progressive policies. He campaigned as a moderate, though. He's also a hunter and a gun owner. So with this pick, yeah, he's someone who has sort of taken hold of the youth vote, gotten really popular on the internet. We know that Harris was going with someone who she was hoping would bring her a real electoral bump. With Minnesota, she's not quite getting that. Minnesota has been a reliably blue state since 1972, but he can likely appeal to these Midwest.
That's what I'm confused about. If you knew you were getting Minnesota, what is the appeal of this guy? Like, really, what is the... I'll try to get a video of him talking so we can see what he sounds like, but that is the confusing part here.
Voters who might look at him, a former high school teacher, as well as someone who they can relate to. So we are still learning more about this, but that is one source confirming that Minnesota Governor Tim Walz will be the running mate. David, back over to you guys.
Okay, and not, it's funny, not bringing quite as much youth to the ticket perhaps as a Josh Shapiro would have as well.
That's right. And I think that's sort of what they were looking for here. Harris herself does not have a long resume in governing experience. She was only in the Senate for one term before she became the vice president. So I think they were looking for someone here who has a lot of executive experience, who is a little bit older, who has been in politics for a long time. Walz spent 6 terms in the House of Representatives and then became a 2-term governor. Also has that military veteran experience and that school teacher experience that he says has sort of made him this sort of entertaining, plain-spoken, folksy presence. He had to sort of keep the attention of high schoolers for so long. So he has that breadth of experience that I think they were looking for to sort of balance out this ticket just a little bit.
Walz and Harris. That is the ticket. That is the ticket. It's just interesting, dude. It's really interesting. I really thought it was going to be someone else. I did not think it was going to be Walz. So Trump, Vance versus Walz and Harris. That is what America is going to be deciding in basically 3 months, dude. August, September, October. Yeah, 3 months left. And then we've got to make a choice in this country that's going to affect the entire world because the American economy affects everybody. And hopefully we don't mess it up. Hopefully we do not mess it up. We'll see. Yeah, the VP debate's going to be interesting with Walz versus Vance and obviously Trump versus Harris. I don't know, dude. I don't know anything about this guy's politics. I know Minnesota is very, very blue, though. Minnesota is incredibly liberal. They've been reliably liberal, and the population is a bit more on the progressive side as well. So, from a moderate perspective, I don't know if that's necessarily moderate that they're getting. If they think, or maybe he is more moderate and he's not as liberal. Anyone who thinks they have a real chance to be POTUS in their career are not interested in losing with Kamala. Look, if you had to ask me right now who's winning, I think Trump still ends up winning this election. I just don't see the majority of Americans picking Kamala as their next president. She's doing way better in the polls than Biden, that's for sure. But like from an electoral college perspective, actually flipping the states she needs to flip, Wisconsin, Ohio, Florida, Arizona, like actually doing that and pulling it off, I don't know, dude, if Kamala could do that. I don't know. And I don't know what she's going to do in the next 3 months. Like raising money is not she'll have unlimited amounts of money. The question is like, how do you convey a message? Like, what is the campaign slogan of Kamala? I know for Trump, it's "Make America Great Again" or whatever, right? And in a nutshell, I know that means America first. So I understand that. What is the slogan of Kamala? Like, what if I vote for her? What is she? If you're a voter, right, in America, and you cast a vote, what are you voting for? Now, for women, maybe it's for abortion, right? So that's a very clear message. But for someone who cares about the broader economy, who cares about crypto, cares about inflation, like, what are you voting for? I think that's the problem. And a lot of us don't know. And until we do know, I think it's going to be a little harder to say it's going to be easy for her to win. Now, the campaign has way more momentum than Biden, that's for sure. But the question is just like, what are we getting? There's a clip I wanted to show. Let me see if I have it, of Kamala speaking about something. Yeah, I might not be able to find it, but it was her speaking about inflation, and it was kind of weird, dude, because it didn't sound like she knew anything about inflation. It was just like she was just saying, like, yeah, prices are high. That's bad. And the question was, how do you stop that? And so those are things that I care about as a voter. And it seems like that's not the stuff she cares too much about. Amit cares about crypto now. What a world. Yup, baby. Get that crypto to go up. That's what I care about. We need Bitcoin at 100,000. Did you hear her talk about cloud storage? Yeah, I saw that, dude. That was, let me see if I can find that. Kamala cloud storage. We got Shyam in about 15 minutes, guys. He'll be live on Bloomberg. Let me just make sure. Yeah, we should have him pretty soon. Yeah, here it is. Here's the clip as well about cloud storage. This is kind of funny. I'm not gonna lie. This is kind of funny.
So you're now no longer are you necessarily keeping those private files in some file cabinet that's locked in the basement of the house. It's on your laptop, and it's then therefore up here in this cloud that exists above us, right? It's no longer in a physical place. So you're now no longer are you necessarily keeping those private files.
I mean, dude, it was look at chat. Can you explain cloud storage to me, Mitt? Well, it's like in the cloud. It's not in a physical place. So it's nowhere in a physical area. No, the funny thing about this dude is like, I don't expect Kamala to know everything about technology. I don't expect Trump to be able, I mean, honestly, if you ask Trump to explain cloud storage, it also would sound kind of stupid. So like, it's not a critique about that. It's more so there's this running idea that she's not able to speak on topics in a way that makes you feel confident that she can handle conversations in a meaningful way. Like what happens when the AI entrepreneurs go to Kamala and talk to her about what's going on? Like, is she really going to be able to deal with those conversations and address them head on? Obama did it perfectly. I mean, Obama was a techno optimist, so he really embraced technology during his term. Trump, I don't know if he's like amazing at it, but you could argue because of his business background, there's a little bit more of an understanding of like regulations and how, you know, companies need to thrive. For Kamala, I think a lot of people are just, you know, what is it going to be? What is it going to be? Have you watched more than a 20-second clip of her? Yes. Dude, I've been watching Kamala for the past couple of years, bro. I've been listening to Kamala for, like, she's been the VP of the United States. We've seen her in plenty of clips. It's bad, dude. Like, some of this stuff, like, it's like, what I get from it is a feeling of inauthenticity. That's the problem I have. It feels a bit more fake. Here's Kamala talking about inflation. I think you guys will get a little bit of an understanding from this clip.
What else are you going to do to fix this problem with inflation?
All right, thank you. Well, let's start with this. Prices have gone up, and families and individuals are dealing with the realities of that bread costs more, that gas costs more. And we have to understand what that means. That's about the cost of living going up. That's about having to stress and stretch limited resources. That's about a source of stress for families that is not only economic, but is on a daily level, something that is a heavy weight to carry. So it is something that we take very seriously, very seriously. And we know from the history of this issue in the United States that when you see these prices go up, it has a direct impact on the quality of life for all people in our country. So it's a big issue, and we take it seriously. And it is a priority, therefore.
Yeah, look, I'm not saying Trump is that much better in these different sound bites. I get Trump has his own issues. I'm just saying it's really a question of how you interpret where you want the presidency to go. Okay, I think we're live on Bloomberg. Let me pull this up. I don't know if Shyam's here yet, but let me pull this up real quick.
Coming up, full market coverage as stocks stage a Tuesday turnaround after $6.5 trillion was wiped from global markets Monday. Plus, we sit down with the CTO of Palantir as AI demand boosts the company's outlook. And the US rules Google illegally monopolized the search market through exclusive deals. It's a bit of a sigh of relief on Tuesday. Call it a dead cat bounce, call it a turnaround. This is what financial markets look like. Notable gains on the NASDAQ 100, chip stocks recovering after it was technology that led the selling in equity markets on Monday. A lot of volatility around growth concerns and also economic data. And then Bitcoin is interesting as well. You saw at $56,000 per token. Later in the show, we'll go deeper on that. Let's move over to the single names because earnings are a big part of the story in the moment. There are two in particular that we're looking at. I really want to focus on Uber, up almost 8%. Strong gross bookings, strong on the bottom line. We're going to get to our reports on that in just a moment. And then coming up, the CTO of Palantir, updated outlook for revenue, updated outlook for profit, AI demand from both commercial and government customers. That's going to be a really interesting conversation in the next segment. Stay tuned for it. We'll go back to markets. Joining us for more is David Bunson, Chief Investment Officer at the Bunson Group, which oversees $5.7 billion in assets under management. The story Monday was about some of the mega cap tech names, some of those that have fueled the gains in the first half of the year. Some of those names you were particularly concerned about, so you sat on the sidelines away from them. How do you react to the last 24 hours then?
Well, it's interesting that with that sector, it wasn't really a Monday story per se. It had started July 10th. The NASDAQ's drawdown had reached 13.5% yesterday. So there was already quite a bit of slide going on. And I think that does stem from the overvaluation. It's pretty stunning when you see a name like NVIDIA that had been down 25 to 30% and was still trading at about 59 times earnings, 30 times sales after such a violent correction. I think even today, when you look at Apple still being negative with this kind of bounce back rally today, it does feel to me like a rotation of leadership is very well underway.
You raise a point that we reiterated in yesterday's show, that Friday marked 4 straight weekly declines on the NASDAQ 100, right? You were already in correction territory. I guess a question for someone like you, David, is what do you do now? You know, is the drawdown or so-called technical correction enough that you start to look at some of the names that for many, they are teeners or there is no alternative to holding them?
Well, there are probably investor categories that might want to look at something there. They certainly shouldn't be doing it because they believe it's reached a value. These are still extremely expensive stocks. For us as dividend growth investors, the tiny little paltry dividend that the NVIDIAs, Metas, and Apples pay is not enough to whet our beak. And so they would have a long way to go to start returning cash to shareholders for us to be attracted. But even apart from our dividend growth orientation, the valuations are still very high. I began professionally managing money in the 1990s, and so I will be forever scarred by the reality of what happens when you overpay for very good companies, very big and successful companies that have a generational success, and yet their stock goes nowhere for 10, 15, 20 years. In Cisco's case, still hasn't got back to 1999 levels. Those stories are real, and I believe very much they will be the case with some of these names too. I think investors have to be careful.
All right, so we've got Shyam in 10 minutes. So we'll pull up Shyam at 11:10, or sorry, in 6 minutes, and we'll hear what he has to say as well. Look, I get I'm critiquing a little bit of Kamala here, but I think I've thrown some fair critiques at Trump. I mean, after the Bitcoin conference, I thought that was one of the worst keynotes he's given ever, and it was really bad. I'm not saying Trump is perfect either. I think both candidates have their flaws, but I think we have to look at the totality of these clients from a variety of perspectives. Trump has a lot of shit that he has on his, that's baggage for him, that people have to decide if they want to deal with or not. He still has lawsuits and court cases and all this stuff going on. Obviously, his age is getting up there also. And then Kamala just has a little bit more lack of experience, you know, given where she served and what she's been able to do as the VP. Now, some people think Kamala is an amazing choice, and we're going to figure out how the American public ultimately thinks about it in the next 3 months. Some people love Trump. Some people hate Trump. Some people think Kamala is the best Democrat nominee you could ever have. Some people think she's the worst. I think in 3 months, we're going to find out how the majority of America thinks. I think it's going to be a landslide either way, dude. I think if Kamala beats Trump, she's going to really beat him. I think if Trump beats Kamala, he's going to really beat her. Like, I don't think this goes 50-50. I think there's like a legit landslide baked into this And I think it's gonna be tough, but it's going to be one person beats the other definitively. Like I think America's going to decide what direction they want the country to go in. It's not going to be like, oh, you know, he won by 1 electoral college or Kamala won by 2 electoral votes. And I guess we'll see. As of now, I think the economy is the most important thing for people, and that potentially could propel Trump. But if abortion ends up becoming the biggest thing, then maybe it's Kamala. But regardless, we have to analyze it because it affects the markets. I mean, if Kamala wins, that has a big impact on crypto and crypto stocks and the broader market, inflation, tax rates, taxing uncapitalized gains, all that stuff, unrealized capital gains. And if Trump wins, do we have more inflation? Because now he doesn't want to protect Taiwan, and now we have tariffs. Like all of this stuff ultimately implicates the people that we're gonna, the policies they're gonna get into office. Bsoft says, do you think Buffett sees OpenAI potential legal ethic issues in the future of Apple AI plan at the moment and is tied to OpenAI as his reasoning to cutting it? You know, it's an interesting point. I've never trusted the whole Apple OpenAI partnership, especially when the co-founder of OpenAI left yesterday. So, yeah, I don't know. I mean, if that is an argument that that Buffett is seeing around a problem with Apple, maybe he gets rid of OpenAI. Or maybe he starts trimming Apple because he's afraid of the OpenAI partnership. Again, I feel like Apple would have gone in a much better direction picking Gemini as their like AI partner exclusively and like just building with them. But because they picked GPT and you're giving Sam Altman the keys to 2 billion people's devices, I don't know. It doesn't make you feel the most safe. So maybe, but I think broadly he just felt it got overvalued and that's why he sold less about the OpenAI legal ethics stuff. All right, we should have Shyam in about 3 minutes on Bloomberg, and we're gonna get to see how he thinks about the quarter and earnings. Any thoughts on AMD? It just keeps dropping. Yeah, let me go back to the markets. So S&P 525, Jumia still down 48%, Nvidia 105, Robinhood 1701, Palantir 2688. Palantir looks like it's going back to 27. Which will be nice. Amazon 162, Carnival Cruise 1489, IWM that's up 1.62%. Wow, that one's up. QQQ is up 1.8. Look at that. Nasdaq and small caps both rallying almost 2%. KRE is up 1%. Spotify is 330. Coinbase 191. MicroStrategy almost 1400. Grindr back to 1114. Unfortunately, I wanted it at $9. AMD 132. Look, I thought AMD's earnings were good. But if we're risk off, AMD is one of the pricier names in the market. It's gotten cheaper since it was at 220, but that one probably sells off with a lot of the other semi names as well. What else? What else do we have? So that's AMD. Nvidia 105. Wow, Nvidia really. Nvidia did not care, dude. Nvidia touched $90 yesterday, $90.69, right back up to 105. Again, their earnings are probably going to crush. The lowest we got a chance today was $100.60 earlier this morning. Shopify's earnings tomorrow. That's going to be important. 53.54. Verizon at 40. ASTS still pushing along up to almost 2%. And then Tesla recovering a little bit. It was at 192. Now it's at 197 on the day. Meta as well, doing really nice. Meta holding it down. Look at Meta back almost. Wow, Meta's up 5%. Almost back to 500. So the Meta dip at 450. I mean, dude, if the market's willing to pay for big tech again, and Meta at 500 means they're definitely willing to pay, even though 500 you could argue is cheap. That's a good sign for a recovery from what we saw before. Tesla's the only one that's down red. Apple's down red. Microsoft, Meta, Google, Amazon, Nvidia, they are all green on the day. Uber as well. Yeah, the VIX is getting crushed. Uber is up 8%. And again, Uber said the consumer is healthy, which is not bad if Uber says consumers not doing horrible either. A little bit more of a pushback to some of the other names that were saying the consumer's in a tough situation. Thoughts on Fubo? I never liked Fubo, dude. It's a streaming platform. Disney has them beat. Netflix has them beat. It's just another way to access content. Like, I'm not really bullish on content companies because SMCI earnings today after the bell, yeah, because content companies, they're not tech companies, and they have to pay to license so much content. The only company that's been able to figure it out effectively is Netflix and do it in a profitable way. Now, the valuation on Fubo, I think, is relatively low, so there's an argument that there's a run built in there eventually. But it's just not that interesting as like a investment. But again, I don't study it too much, so I could be wrong. There could be more stuff that people care about. What other macro news? We got Shyam, who should be starting soon. Let me pull up Bloomberg. I think he'll be on in a bit, and then we'll start with that.
Let's keep it going with earnings coverage. Palantir out with results, boosting its revenue guidance for the year to a range of 2.74 billion to 2.75 billion ahead of estimates, with AI demand also helping Palantir boost its profit outlook. There's been growth in business with government and in commercial customers. AIP, Palantir's artificial intelligence platform, and other products has, quote, transformed the business in little more than a year. CTO Shyam Sankar joins us to discuss. Shyam, on the call, this transformation that Dr. Kart was talking about, I've been to a few AIP cons, but as CTO, you're working on it. I think just explain the basics of that. What's changed within Palantir from a technology perspective and in the domain of artificial intelligence?
Well, what you really see in the market is this massive bottleneck between prototyping and production. And that happens to be where AIP is most differentiated. And that differentiation is built on a decade of deep technical investments like the ontology, the OSDK, the security and business primitives that we built throughout the platforms, like functions, actions, automations, and this pipeline that we have that's really focused on addressing that. And I think what's changed as you've been to these AIP cons is that the market now understands how severe that bottleneck is. I think your last guest was just talking about that, where it's so easy to build a charismatic AI prototype. It's about the amount of effort of building a PowerPoint slide, but it's also that amount of utility. And unlike traditional deterministic software, this kind of powerful stochastic genie that is LLMs, it requires a lot more work to get to production, maybe 10 to 100 times as much work. And that requires the tool chain that we've assembled with AIP.
I've had a few conversations with your CEO, Alex Karp, about his frustration with the PowerPoint deck versus the reality of shipping product. We'll put that to one side for now, Shyam. There was a heavy emphasis on working with the military in the written materials and on the call. Could you just give the basics of what your work with the military looks like present day?
Look, in the commercial world, you call it a value chain, from the hand of your supplier to the hand of your customer. In the military, it's about a kill chain, from sensor to shooter. But really, at the most abstract level, it's the same thing. We're trying to enable our warfighters to have information dominance and decision advantage. How can I see, to quote Sun Tzu, if you know your enemy and you know yourself, you're going to win. And so, how can I see everything there is to know about the threat? How can I understand everything I have to combat and deter any aggression from those threats? And when you look at the geopolitical landscape right now, it could not be more dangerous. Everything that's going on in Eastern Europe, the massive tensions that exist in the Middle East, and the ongoing issues that we have in deterring aggression in the Pacific.
Beyond sort of the importance of data, where does Palantir sit in the defense ecosystem or even the defense supply chain? Are you sort of very closely aligned with hardware makers, the aerospace community, or is the model more focused on you just going direct to different arms of the defense base with government?
Yeah, we're touching all of it. One of the things I'm most excited about, I've been calling the first breakfast as an antidote to the 1993 Last Supper that led to the consolidation of our defense industrial base, where we went from 51 primes down to 5. Because we forget that at the dawn of World War II, we didn't have a defense industrial base, we had an American industrial base. Chrysler made missiles, General Mills, the cereal company, made inertial guidance systems. And so we have this moment right now in defense tech where $100 billion or more of capital has been deployed. A bolus of founders have shown up. There's a lot of creativity, a lot of energy. As a company that's kind of been pathfinding over 20 years, not only have we developed our software that gives these warfighters unique advantage, like the Maven contract that CDAO just recently awarded for nearly $500 million, but really this software infrastructure that's required to deliver modern American software to the battlefield in air-gapped environments at speed, at pace, well ahead of the threats of 2027. So we've been working very closely with both traditional primes, integrating our software into their hardware, helping them actually with production. If you think about the 50% of our business that's commercial-oriented, how do we build jet engines and satellites faster, better, cheaper? In addition to the new entrants who need to achieve scale, and time value of money is everything for them.
Whenever we have an executive on this program, I always go to our audience and say, what is it that you want to know from, in this case, Palantir? I would say most of the questions were about warp speed, very basic ones. Why now with warp speed? And the obstacles to rolling it out, making it sort of more readily available, pervasive out there, Shyam.
Yeah, that's great. I'm so excited about Warp Speed. It's what I'm spending all of my time on and really shaping the R&D roadmap around. Warp Speed is our modern American operating system for manufacturing. And the reason why now, for the better part of 20 years, we have helped traditional manufacturers build planes, trains, automobiles, and ships. But most of those folks are stuck in a legacy mode of how they're operating. And you're able to help here or there. But what's unique about the reindustrialization movement that's happening right now in America is that these founders, they're alumni of Palantir, of Tesla, of SpaceX, and they understand that the traditional ERP, PLM, PLC software doesn't really work. That most of these successful companies have had to build their own software. And that is really an unaffordable journey. So that there's this massive opportunity to take the power of AIP and the historical experiences we have throughout the value chain of production to help our customers bend their atoms better with bits.
Shyam, I have your CTO. I kind of have some quick fire questions that I've never been able to answer about Palantir. In the first instance, AIP and warp speed. Over the year, what's the kind of key foundational model or LLM that you've been building on top of? I know you partner as well as sort of think in-house about the model or foundation level, but that's a question that comes up quite a lot. Who are you building on top of and working with?
Well, I think all the value is really going to accrete at the application layer. And what we've seen in production is that you actually need a menagerie of models. And if you think about the most expensive frontier model out there right now, it's 1,000 times more expensive than the cheapest open source model for 10% more ELO, or 10% more IQ as a rough proxy. That's not a compelling price performance trade-off. You already see that the first versions of GPT-4 have been sunset. We need to think about this problem as, okay, what is the infrastructure I need to manage? I'm turning my software into something that is now stochastic. It's not deterministic anymore. Computer scientists that we have trained, they are all used to writing deterministic code. This harkens more to how we think about the transition from analog circuits to digital circuits, the sort of error correction you need, the sort of infrastructure you need to think about having so that you can have the abstraction to think about these things as being digital. That's where I think the value is going to be.
Go ahead, sorry.
And so we're very focused on helping our customers get the right models for the right use cases, auto-evaluate that, automatically generate iterations on the prompts that get them there. And part of our theory is that really prompts are for developers. Chat is a dead end. We're guiding our customers through this journey here. They get there pretty quickly to realize that we should be thinking of LLMs as a new type of runtime. The way I might write a Python function, well, I'm going to write an LLM function too.
Shyam, for the commercial half of the business, is there a specific hyperscale cloud platform or partner that you work with to support its growth?
We're working with all of them. We have deep and very valuable relationships there. So we're very happy with that.
This last year has been about AIP and growth. What's the next 12 months like for Palantir, Shyam?
Well, I think it's really about deepening the investments that we have with AIP that are addressing this bottleneck between prototyping and production. If you look at David Kahn at Sequoia's article on the $600 billion hole in revenue, I think this is where the hole is. This is the bottleneck in the market. It's the most important problem to solve. And the folks who solve it first, and I think we're in the pole position there, have the opportunity to take the entire market.
Shyam Sankar, CTO of Palantir. It's great to have you back on Bloomberg Technology. Thank you so much. Now, coming up on the show, we look at Google's loss.
Okay, folks, there you go. I thought Shyam crushed it. I thought he was good. I thought he was very strong, and I thought he answered the questions in the way that he historically does answer these questions. He kind of gives you a big picture and then gets a little bit granular there. I think warp speed, we're still all trying to fully understand what warp speed is. And at its core, if he describes it as an operating system for American manufacturing, and using the experience they have with Palantir alum that have gone on to work at some of these companies and how they've experienced the bottlenecks within trying to deliver value to these manufacturers in America uniquely, given America does not have the manufacturing culture that China or Japan has, then that is an industry-wide product that can be adopted from a particular vertical out of Palantir stack and potentially productized into a very unique go-to-market strategy and also a very unique offering for the broader manufacturing sector of the United States. So overall, I thought it was good. I thought it was really strong. I think it's kind of the same stuff we heard yesterday on earnings as well. And I guess we're going to get more coverage of Warp Speed pretty soon in the next coming weeks as Palantir eventually educates us more about what this product is and what it means. Palantir stock $26.95 right now. So markets are struggling just a little bit. S&P 524 is at 526. Palantir was at 27. Now it's at 26.94. Robinhood was at 1714. Now it's at 1698. Amazon 162. Carnival Cruise 1477. IWM at 204. Nvidia at 104. So broader market still intact. We are green for the day. Earnings were good today across the board on a lot of companies, and Japan helped a lot. But I still think we need a few more days to really figure out if we are beyond what we saw in Japan. The VIX has crushed today, which is good. Or if that was just the beginning of a further downturn and this is a dead cat bounce inside of a bear market. I guess we'll see. A final thing on Palantir, they did file an auto shelf registration. So the number of shares I just found out were not disclosed in that shelf registration. So we don't have a number of shares. I would imagine it's 100 to 200 million, kind of typical. But this essentially allows them to sell stock on the open market. And they can do it whenever they want. Now, we don't have the size disclosed. That's kind of weird. I think eventually we'll get the size of that disclosed. But it's just typical. I think it would be in line with the 3% dilution that they're factoring every year. And again, that's another reason the growth rate needed to increase, because if you're diluting by 3% and you're only growing at 20%, right, you need the growth to kind of outpace the dilution. And Palantir looks like they're well on the way to get back to 30%, which would be 10x the dilution every year. Okay, I think that's pretty much it. Someone says, I work for a semiconductor manufacturing as an automation engineer. I would love to see AI apply to our automation software PLCs. Yeah, and I think that's exactly what Shyam's trying to do here and what Palantir's trying to do in terms of actually applying a industry-leading product as an operating system for American manufacturers, semiconductors, etc. I think that's a product that can be very big. That opportunity is gigantic. All those companies know they need it. That's why Panasonic partnered with Palantir. It's just a question of them showing enough value there. And I think if they make an entire product just for that industry, they get to more easily streamline and show that value as well. Okay, word of the day, and then I'll be back at 3:45. 3:45, we have some huge earnings after the bell. I'll preview those earnings in a second, but we have a lot of earnings to get through at 3:45, so it'll be a big earnings day today. Word of the day is Zarzuela.
Zarzuela.
Okay, never mind. Zarzuela. A Spanish opera having spoken dialogue and often satirically treated topical theme. I've never heard of this before. My favorite part of this is Zarzuela was the comedic interaction between the characters. The local arts festival included Zarzuela to showcase the rich cultural heritage of Spain.
Zarzuela.
Zarzuela. Has anyone heard of this before? Anyone? Has anyone? I've never heard of this before. A Spanish opera that's satirical. All right, next time I watch a Zarzuela, I'll know what it is. Yeah, I have no idea. I've never heard of this word. Okay, so that's the word of the day. Earnings today after the bell. I'll be back at 3:45. We have Airbnb. That's a big one, especially for the consumer. We have Instacart. That's another big one for the consumer. We have Upstart, insurance, AI insurance. That's going to be important. Fortinet, cybersecurity. That's going to be important. Rivian. That's going to be important for EVs. Toast, which is a fintech company. That's going to be important as well for small businesses. And then SMCI. That's going to be the big one for the semis. So there you go. All right, 3:45. We'll be back. Lots of earnings to dive into. We'll see what happens from there, and we'll see if this market can continue this rebound as well. Oh, I didn't show you guys. I have the day 2 of the stupid protein shake. Here we go. We're still just got to make sure I prove it to you guys. We're drinking it every single day. All right. Thank you, everybody. I'll see you guys at 3:45 later today. Bye, everyone.